a respondent bank acts as a correspondent bank to a third party, to a financial institution. Meanwhile, the correspondent bank does not know that there is a relationship, which exposes the relationship, which exposes the correspondent bank to either sanction, regulatory sanction, either revocation of license, either because of the third party, the financial institution that they are being nested, or there's a downstream relationship, is sanctioned to expose the correspondent bank. So, in a situation like this, what does the landlord do? Say, I don't want this relationship again. I will cut off this, and that is what we call de-risking in correspondent banking. Thank you very much.
Wow, that is very well put. I think this has made it very, very clear what correspondent banking is, the KYC that goes into it, and then what leads to the assessment and then the de-risking as well. I mean, I wanted to add one example to your landlord-tenant relationship. Some of them will tell you that make sure you don't come home past 10 p.m. and all of that. I mean,
yes, yes.
You've seen all that examples, but that is a great way to explain what correspondent banking relationships are. So I think I would ask Vijay to probably share with us how to make cross-border payments more clean, more efficient, and faster for us to be able to achieve that speed that we all require for making payments.
Thank you. So I like the landlord example, and it gravitates, right? So the first part is obviously the relationship and trust. So when you are executing the payments, in most common cases, if you are supporting a specific currency from Nigeria, for example, into another country, the relationship matters, which means the correspondent banking relationships has to be pain-free, and then it has to be proper. So from a landlords and tenants examples perspective, that's exactly the point. The relationship has to be right for you to get a monthly payment to start off with, right? The second part is understanding the liquidity of the correspondents as well, and the exposure of correspondents over a period of time, which Mr. Chukuma basically talked about. So every time you need to review that relationship. Are they ready to execute straight through process? What are the problems that they're having? How many days does it take to execute a payment? Does it take 4 days? Does it take 5 days? Does it take 10 days? So if that is a 10 days, how do we then get it to 5 days? How do we use proper routes? So that's the second part, which requires data transparency. And that is something that is available in the market, and you can basically use that data transparency to even vet one correspondent with another correspondent in a specific country. So that's something that you would do as a relationship manager. The third part is obviously the execution of payments. The execution of payments has to be thought through. So in that case, your routing matters, your data matters, your standard settlement instructions matter. So those are the data that are required for you to even execute and process payments before it leaves your bank. So that is the third important part that is required. And these are the three things that needs to be done in that relationship.
Okay, thank you so much. So EJK, let me come to you. How is NIPS going to help us in such a case? Maybe something that NIPS is doing now, something that NIPS intends to do in future. How is NIPS going to help us to be able to make payments safer, cleaner, and faster?
Okay. Hello. Has it gone again? Okay, good. So, switching services serves as a backbone, or can serve as a backbone for international payment, because by providing interoperability and connectivity to institutions that want to connect, we have partners with global payment systems, providing cross-border payment systems also. A prime example is, we discussed that this morning, PAPS, where African customers can send and receive payments without the hassles of, and not just payment, instant payment, without the hassles of exchange currency and everything, because you deposited in your local currency. And also security and standardizations, ensuring to follow CBN's guidelines. course, I think, again, just as we discussed this morning, it's a conversation that we can bring in with the innovation and the strategy team to ensure that they imbibe this, especially for away from African payments now, international payments. And then that way we can find a way to chart a course on that. I think that's, as long as you're following the standard, the securities are intact, and then standardization following CBN's guideline, we're good.
Okay, all right. Please, audience, I just want to draw your attention that if you have any questions, you can put it in the Slido app under the Q&A, and then we'll be able to address them when this panel discussion is over. So I think we are getting to our last round of questions so that we can make way for the FCC discussion as well. So I would probably want to find out from all of you, maybe some few minutes to each of you, that share with us what mindset or what you believe we need to change as institutions, as a people, so that we can probably be able to strengthen our correspondent banking relationships and achieve payment efficiency. I'll start with you, Mr. Chukuma.
Okay, thank you very much. Okay, considering FATF recommendations 16 and 15, you know, the travel rule on cryptocurrency, and the on 16, which says that every transaction, both the sender and the receiver, the information there should be an unveiling of data, the address, everything about it. Even CBN and FATF made an upgrade on recommendation 16 that before 2030, that even the legal entity and identifier should be used during transactions. But you know, for now, not every company, not every organization has it. But they gave a timeline of from now to 2030. So, in my opinion, during transactions, there should be speed, less of delay. Because of that delay causes breaks trust. If there's speed and if there's accuracy, security, so that in such a way that there will not be an issue of I transferred money for 2 days, it has not been seen. That security, transparency, there should be an end-to-end security, that and integrity, that what I transferred is what I got. And I believe that's what in payment, in correspondent banking relationship, I believe there's, during KYC, I call KYC or due diligence as any person that does is a gatekeeper. Whatever you allow in an organization, that thing, if you allow a demon to enter, you have allowed it. So proper and robust KYC, if being done, it will help to curb money laundering, terrorism financing. It will curb it. It will even curb fraud. Because any time a robust KYC is being done, there are many things you have to check. You have to assess the kind of governance that the organization has. You have to check the jurisdiction. Is the entity a sanctioned entity? Are the UBOs, you have to unveil. Are the UBOs, all of them, after running them through sanctions screening tools, is there any SDN there? Is the jurisdiction high risk? These are the things, these are the parameters one needs to check before doing a robust. And how can we do it effectively? We need a repository, a general repository that either you buy or you subscribe or you get off the shelf or within, that when carrying out KYC, you don't need to wait for a long time. You go there, subscribe, get the data of the correspondent or the counterparty, get the information, do it while they are sending their own data. 2, it helps in revalidation. When you give me a data, when you give me document, when you give me information, I go to that general repository that I am subscribed to and verify what I have. Meanwhile, I'm carrying out my KYC, because many a time when you are running a KYC or due diligence to onboard or enhance due diligence to onboard a customer, by the time you request to onboard a financial institution, by the time you request for their data, sometimes they'll be giving you in piecemeal. But when there is a general repository that you subscribe to, you get the information. Why they are giving you, why they are getting their own. When they give you, you do your validation and know whether it's okay. Meanwhile, you have carried out within 2-3 days, you are through with your. These two things, I believe, when it is improved, when it is generally improved within the country, it will help in onboarding, it will help in relationship, it will even build trust and enhance the relationship between correspondent and respondent bank. Thank you.
Wow, thank you so much. EGK, what are your thoughts?
Riding on the back of what he said, all like the three things I want to say is speed, access, and inclusivity. That's all.
Thank you. Vijay?
I just wanted to say, to change mindsets of correspondent banking, there are two myths that needs to be broken. Myth number one, compliance and efficiency are two different things. That's a myth. You increase compliance, your efficiency goes down because your speed goes down of transaction. That is again a myth. So what we have seen across the board is you can still maintain increasing compliance posture that drives standardization, and therefore your efficiency increases and the speed of transaction increases. So you have seen in a lot of jurisdictions where compliances have increased and as well as the payments have become near instant payments. So that's one myth we have to solve. The second mindset that we have to change is technology and data is a black box. So that is a myth again. There are technologies available, they are cheap, affordable. There are data which is available to ensure transparency in your system. So it's not like if you're executing a cross-border payment, it goes into a black box and then we don't know how long it's going to take. So that's not correct. We have enough amount of data which is available across the routing networks to actually tell you that this is likely to take 2 days, this is likely to take 5 days, and then you build your systems around it, and then the payments will become a lot more efficient.
Okay, thank you so much. Thank you so much, panelists. I think at this point we'll open the floor for questions. There is a mic on standby if anybody has a question for our panel members to ask. I'm not seeing any questions on Slido, but if you have any questions, there's a mic on standby for you to be able to pose it directly to our panelists.
Hello? Okay. Good afternoon, panelists. Thank you very much for the very engaging session. I want to piggyback off a comment that Mr. Chukwuma was talking about, legal entity identifiers. So one of the takeaways from this session is speed and the ability to simultaneously verify counterparties, clients, and institutions even before they send their information for validation. So I believe one way that can be done for financial institutions especially is through legal entity identifiers. I know that the Securities and Exchange Commission, again, has made it compulsory going forward for capital market operators to basically get a legal entity identifier. And like you also said, the CBN is mandating banks through FATF, mandating other financial institutions to as well get that. So my question is, if we have that, how are service providers like LexisNexis, and how well would that process, having a legal entity identifier, how well would that go in ensuring that whoever I'm dealing with as a financial institution, I have up-to-date information, and it basically cuts turnaround time in terms of service delivery. Do you understand that question? Right. Thank you.
I should take the question.
Yeah, that's a question directly to you, actually.
Okay, the question is very simple and straightforward. From the onset of this meeting and program, we were told, and we know, that there's Bankers Almanac. If you subscribe to it, all the information you need about the organization you want to run KYC on is there.
I just wanted to add a couple of things. Exactly, he mentioned Bankers Almanac. I'm not supposed to mention Bankers Almanac, but you asked a question around how do we get LEI information across. So we have solutions where LEI is used across two platforms. One is from FATF's perspective, from due diligence. The second one is international payments. So if you want to execute international payments in ISO 20022, you need PACS and PAIN messages, and one of the key important data for that is legal entity identifiers. So both payments transactions as well as trade and even compliance, all of them require LEI. So we have, as a part of a solution, almost 100,000 LEIs across banking institutions and non-financial institutions, and then fintechs across the world. We capture LEI as a part of transaction. We capture LEI as a part of the compliance aspect as well. So our solutions will have both the LEIs available. So if you're interested in LEIs, the easiest way is to use the solution, and we'll always be keeping it updated. So LEI is not something that will change, but if you create a parent an entity, and then you create a subsidiary entity, that will have a different LEI. So in that case, we add LEI to that list. That's how you would be updated from that list from LexisNexis. Thank you, Chu.
Thank you so much, Panel. Please, I think there's another question here.
Good afternoon, everybody. So I just wanted to ask Mr. Chukuma, how do we marry sanction screening and correspondent banking together?
Okay. Marry. How? Okay, sanction screening. Okay, let me try if I don't understand. Can you throw more light again?
Okay, so how does sanction screening come in play with correspondence banking?
Okay. Sanction screening is a subset of due diligence, because during before onboarding, before there's a relationship, there's always an exchange of information. And when I was talking initially, I said about trust. There are some information given, data, and documentation. The names of the UBOs, directors, everything, and the institution itself comes in. You do sanction screening. Sanction screening is a process of running the information names of individual, environment, jurisdiction. Sometimes now there are ports, like port of loading, ports and vessels running through a sanction screening tool to know if there is any sanctioned entity, if they are sanctioned. Am I getting it? Yes. So during onboarding of correspondent banking, there are the need for the individuals or the directors, everything to be passed through a sanction screening tool, right? To check if there are, in sanction screening, there are lists that are, we have UN lists, OFAC lists, EU list. There is another body that went and collected some that they call it Dow Jones. There are people subscribe to them. They are a group of lists, even EFCC lists. Some sanction screening tools have all the lists embedded in them. So when you pass information through them, if there's any match, it brings it up. There's another one they call transaction sanction screening. Sanction screening screens through names, screen through entities, screen through events. But transaction sanction screen through transactions. Transactions are passed through it. Did I get your information? Are you getting it? Okay, thank you.
Okay. Thank you so much, audience, for all the questions, and thank you so much, panelists. I think because of time, our panelists are around till the end of the day. So if you have any further questions, kindly approach them and be able to engage them for you to get clarity on same. But I would like to thank the panelists so much for joining this conversation and having this discussion. I think one thing that we will take away from this session is that we are all looking for speed, and then the people that we have relationships with are also looking at trust. When you trust your partner, when you tell them that you sent money, they are going to believe even though they've not received the alert, because that relationship exists. So as much as possible, let's look at compliance, be compliant with what our correspondent bank and those that we are establishing relationships with are requiring of us, and then we'll be able to build on that trust, and we'll be able to have that seamless experience. So thank you all so much for joining the panel, and thank you, audience, as well. Thank you.
Thank you very much.
Thank you.
Thank you.
Very much, Frederick, and the correspondent banking and payments panel. Thank you very much for sharing such an insightful message with us. So they said, and they taught us that compliance and efficiency are two different things. So it is proper that we have robust KYC systems in place that will help us curb issues relating to fraud and money laundering. Thank you very much once again, the correspondent banking and then payment fraud panel. Thank you very much. Can we thank them with a round of applause, please? Due to time, we are going to move quickly into the next session. That is going to be really focused on AML and then CFT. So this is going to dive into our readiness to the new AML draft, so that once this becomes a working document, you know that as an institution, you are ready to move forward with the knowledge that we've gathered here. So to get the panel on stage, help me welcome the following people. Just a second. So on the FCC, the AML and CFT panel, shall we welcome Mr. Lanre Adeshomo, who is the head of compliance for First City Monument Bank. And we thank him very much for coming and accepting this with his 20 years of experience in accounting, banking, and financial crime compliance. We are honored to have you here, Mr. Lanre. Please let the clapping be more to appreciate him accepting to be on this panel for us. And the next person joining Mr. Lanre is Mr. Olagoke Saeed Salawu, who is a leading voice in financial crime compliance and and Digital Era Risk Governance. He is also the head of the president of the Financial Crime Compliance Department at Sterling Bank, as well as the president of the Association of Certified Financial Crime Specialists for West African Chapter. Shall we welcome him with a round of applause? Thank you very much. Thank you very much for accepting to be part of this panel. And lastly, we have Mr. Osedukem from Flutterwave, who is also the Compliance Testing Senior Manager overseeing Global Compliance Program at Flutterwave. Shall we welcome him with a round of applause as well? And thank you very much for accepting to be on this panel. And this panel is going to be moderated by our own Fabrice Ndongo, who is a subject matter expert at LexisNexis Risk Solutions, specializing in financial crime compliance, platform orchestration as well. Thank you very much. So I'll hand over to Fabrice to take over the panel discussion. And as usual, if you have any question, please drop it on Slido, or you can also note your questions so that after the panel session, all your questions will be addressed. Thank you very much.
Thank you, everyone. So my name is Fabrice Ndongo. So I'm the regional lead for financial crime compliance platforms at LexisNexis Risk Solution, leading the African market. So today I will be moderating a panel with my dear panelists here, where we will be discussing about the drafts, the regulatory draft that the central bank is currently working on. As you can notice, in Africa, there's a lot of countries that are currently in the gray list. This is due because of strategic deficiencies in their AML policies and combating the financing of terrorism. So to start, I would like us to focus on immediate challenges of this new draft. So the new AML baseline draft represents a significant operational shift. And from your perspective, what is the single most difficult requirement for financial institutions to implement effectively, and what is a practical first step to address it? So I would like us to focus on treatment step, on treatment perspective. So in terms of the regulatory perspective, what is the implication? And then in terms of the technical perspective, and how do we solve it? So maybe if you can start with Lanre.
Good afternoon, everyone. Thank you for having me. I think so. To your question, so the major challenge that I see in the baseline AML solution guideline that CBN released is for me, I've been in the industry for a while, I think it's too generic. So all the financial institutions, fintech, they are bashed together, which I don't think is ideal because they are facing different kind of risk. They are exposed to different kind of customers. So I believe it should have been properly stratified. But since it's still a draft, I believe some of the comments would have gone to CBN, and I know that CBN, be who they are going to factor that into the final document that will be released that will guide all the stakeholders in implementing that solution. For the operators, whether you're a bank, an FI, a fintech, PSSP, and or whatnot, what we need to do is to quickly do like a risk assessment of where we are. Let's do like a gap assessment of what are the gaps, what are the existing gaps in our processes. We should not wait until the final document is released so that we get prepared for the eventual release of the final document so that we hit the ground running once the document is released. Aside that, I think the major problem we're also going to have to do with technology. The technology bit side of things, most of the technology that we have today, they are tailored towards AML alone, and with what is going on globally, we are exposed to cyber crime issue, we are exposed to fraud, we are exposed to all sorts of things. So I believe, so in coming up with whatever solution that we are going to be, that most institutions will adopt, I think it should look at it holistically, financial crime in the whole spectrum, whether it's fraud, money laundering, terrorism financing, protection of finance, or what not have you. So any of the operators that are here, if you are going to look at it, you need to look at a solution that is robust, that can cater for all sort of risk that you might be exposed to as a financial institution. Then the last thing I think we need to touch on is that the technology is advancing very rapidly. We're in the days of AI, machine learning, and whatnot. The skill set is not there, so the people need to be trained. So I not just train the people, even the customer. We need to create enough awareness, but also our customers, so that as we are training our people are aware. They know what and what to look out for. Then customers, there should be proper dissemination of information, even instead of using local languages to disseminate to some of our customers that they are tech savvy, they are aware. Because in Nigeria, for instance, fraudster will just call the customer and the customer will share OTP, share information, and before you know, funds are gone. So if there is that awareness, so it's both ways. As we are training ourselves, we should create enough awareness for our customers so that we are not exposed to this financial crime in any way. Thank you.
Thank you. Mr. Olagoke, do you have anything to add on what Mr. Larry mentioned?
No, I think Mr. Larry has covered it very well. So while I commend the CBN in coming out with this draft, I think the draft, this baseline that they released has been much needed. I think it's a few years too late, in my opinion. I think we should have had this a while ago. Like he rightly said, it's a bit generic. If you look at it, you know, I played in the payment space, I've played in the cross-border space and in banking. Widely different requirements. If you look at just transaction screening alone, looking at the baseline, you cannot cut across all three of them. So, like he rightly said, I think they have to apply a bit more nuance to it. And one thing I'll just add is the data part as well. If you look at the guideline, what they requires rich, structured, and well-processed data. I'm not sure a lot of financial institutions have that kind of data. So I also believe that they may need to give some allowances. I don't think every financial institution needs to be fully automated yet. If you look at the FATF requirement, they still allow you to do some manual, you know, if you don't have too many customers, you can still do some things manually. So I think that document requires a little bit more structure and more depth.
Okay, thank you. So, Mr. Osei, based on what Mr. Lanre and Mr. Olagoke mentioned, how do you think this can be resolved?
For me, their comments center around structuring of the document. So when we talk about structuring, you know, you can come in two ways. You can structure based on the players in the industry. So you can have a baseline draft for those that play in the payment processing space, the banks, insurance, IMTOs, and the switching licenses. You can also structure it based on the AML controls. So if you take KYC, for instance, when you say automate, what do you want to see? You get what are the databases you expect us to verify our KYC information from? If you take transaction monitoring, give us a baseline with regards to that control and say, what does automation look like? Is it a rule set? Should the same tool be used to administer the rule? Who should have access to it? And of course, if you take sanction screening, which is somewhere Nexus plays in, what do you want to see? What are the lists do you want to see from sanction screening? Again, I know that LexisNexis provides a solution where you can actually impute data of customers that you have off-boarded, you know. So when you are conducting screening at onboarding, the baseline should reflect, is that some of the information you want apart from the lists? Of course, you have your OFAC, UN lists, Nigerian sanctions list, but what other lists do you want embedded, and what should it look like? You know, second level reviews, quality checks and all that. And then regulatory reporting. If you want us to automate regulatory reporting, the CBN should lead in that aspect. OML should be optimized, where we render CTRs and STRs. Then other regulatory reports like our PEP reports, they should provide an automated platform so that API can talk to API. And then we definitely solve the automation issue. Because if you're asking me, if you are asking the players to automate, and you as the regulator, you have not automated, you see that there is a sort of gap there. Thank you.
Thank you. No, definitely. As I mentioned, when you look at Africa, there is a lot of countries that have been gray listed. And this has a very heavy impact on FDI, foreign direct investment. I believe that's why the majority of the central banks are currently reviewing their regulation around money laundering so that they can come off the gray list. So now, in terms of the global context perspective, so based on what I just mentioned, this draft was not implemented in a vacuum. So how was FATEP focused on effectiveness to help financial institutions in Nigeria? Yeah.
Okay. I would say I don't want to directly tie the draft to us trying to get off the gray list. It is, I would not say it's not connected as well to what, you know, largely, if you look at the last 4 or 5 years, there have been a number of regulatory advisories and, you know, and circulars, maybe more in the last 4 or 5 years than in the last 10 years. Will you say it's tied to the us being grey listed? I don't want to be the one to say it. But the point is that I think as a country, we have gotten to the point where we cannot hide our size and our importance. Being grey listed was not a good mark for us. And I will say for a fact that the government, the present government, has been making a lot of efforts to get us off the grey list. I cannot say too much on that. You know, we just had the delegates from FATF recently come to do the ICRG. And I hope it's going to be good. You know, everybody continue to pray for the country. In terms of the document itself, I think it's going to take us to the next level in terms of compliance as a whole. Like I said, the idea, if you look at a number of financial institutions, for example, you can see some people probably don't have transaction monitoring solutions. I mean, there are people who don't do transaction screening. So I believe the goal of this document is to at least get everybody on a standard, which is why it's called the standard baseline, right? Get everybody up to a point where you have at least, you know, basic things. And then my hope is that when everybody gets up to a certain level, then we can then build up to the next level. Whether that will make sure that we don't get off the gray list is a completely different thing. Like, you know, the gray list is there are a number of things. There's the political will, there's the strength of the supervisors, there's the effectiveness, there's the tech. So, you know, that's a bit complicated, but will it help us as a country in terms of our compliance posture? Absolutely, it will.
Okay, thank you for that. Very insightful. So now I want to move to the next question that's going to be addressed to Mr. Osei. So it's focusing specifically on the integrated defense. So since COVID, a lot of onboarding processes went digital, okay? So where banks and other financial institutions are heavily invested into digital transformation to facilitate onboarding. So the concept of FREML, which is fraud and AML, requires breaking down historic silos, okay, in terms of modular solutions. So beyond technology, what cultural and procedural shifts are essential to foster true collaboration between fraud, AML, and cybersecurity teams? So maybe we can break it down in terms of technical perspective, people perspective, and processes.
Yes, again, these silos you've mentioned, the fraud, AML, and cybersecurity, everything they work against the backdrop of your regulatory expectations. Of course, the CBN has released what do they expect with respect to KYC requirements. And now, like you've mentioned, with digital transformation, everybody wants to automate the collection and verification of that of the KYC requirements. So the problem we see is where bad actors, again, there was a time we had people's NIN in Nigeria, they were for sale and all that. So bad actors are able to engage in identity theft and submit the KYC identity records of individuals they are not. And that's where we're trying to look at how do we marry fraud, AML, and cybersecurity. So the key thing is when we have a solution that we use for onboarding, we should embed compliance into it. So most times when we are trying to get a solution for onboarding, it is usually at the end, we call the compliance team to come and look at the red flags posed by this solution. Does the solution have liveliness check? Is it possible for me to pose as someone else? There's no, and again, LexisNexis is here. There is no time you guys will present a solution and tell us what is wrong with it. What you tell us is what is right with it. So we need solution providers to be extremely honest, brutally honest, and say, this is where we are very good, but this is where we are not too good. So that that gap assessment is clear and we are able to plug gaps. Because the way solutions are provided to us today, it is as if it will fix all our problems. But then again, when we start implementing the solutions, we now discover that I can actually submit another person's BVN, and it is not, the OTP is not sent to the phone number attached to the BVN. The OTP is sent to any phone number I provide. That is not BVN verification. I can actually submit someone else's NIN, and you are verifying that, yes, this NIN is existent. But the real verification is the person that submitted this NIN. Is it the same person on the NIN? So those are some of the pitfalls in all these solutions. So just to round off, what is important is involve the compliance team early. Product compliance is not at the end. They should be involved from the beginning so that they can ask the correct questions. And most importantly, everything we do, make sure we do it within the realms of the regulatory compliance, data privacy, and best practices.
Okay, thank you, Mr. Ose. I saw Mr. Lanre smiling. I don't know if you have anything to add to that.
I think, by and large, I think I said it. I'm just smiling because what he's saying is the actual fact in the sense that when vendors come to you to come and market solution, they are not open enough to, bold enough to tell you that this is not our area of strength. Many a times, I think in my previous, we've made some solutions that eventually we had to junk them because they didn't meet our expectation, so to say. So that's why I was just smiling that he's saying the truth.
Okay.
Yeah, so let me also just, I see that also, he mentioned a lot about the technology. I just want to also drill down a little on the people part of it. So the intersection of fraud and AML. So while generally from a global perspective, there is convergence, I think there is also going to be a need for people to acquire those skills. We need to have more people who are, AML, like I think we're having a conversation, and the truth is in a lot of financial institutions, you have siloed departments. You have your AML team here, you have your fraud team here. They probably never speak, maybe on a quarterly basis or something. So from a people perspective, there needs to be more deliberate convergence of professionals, people trying to get that skill and marrying them. And what you will find is that when you have both skills, you realize that they are very, very interwoven. One is a predicate offense, one is a secondary offense. So there must always be money laundering after fraud. So it only makes sense that we have this process flow that works together. So I just wanted to put that in there.
Okay, thank you, Mr. Olagoke. So maybe to move to the next question, this will focus much more on the identity imperatives. So a core challenge is achieving a holistic view of customer identity. So how can institutions effectively blend digital identity intelligence like device reputation, behavioral biometrics, with traditional KYC data to satisfy the new draft stringent due diligence requirement? We are Mr. Olagoke.
Okay, thank you. When I hear these words, I'm always happy because it takes me to somewhere I want us to be. So I know the FATF released the documents about maybe 2 or 3 years ago on digital identity, and they mentioned a particular phrase, progressive identity. So the concept means that when you onboard a customer, the truth is at that point, that is the least you should know about that customer. That's the least you should know about that customer. And the idea is that with every transaction, every time he touches, if he has a mobile app or he has a card, with every point of intersection with your institution, you know, his transactions, his behavior, the way he logs into the app, you should be learning more about that customer. And by 3-4 years' time, ideally, his risk to you should be slightly lower because you should know him so well. You know where he lives, you know, and of course, this is with data protection and data privacy, right? But you should know everything about the customer. So the truth is, I think if we implement a lot of these things, like you mentioned, device reputation, address geolocation, and all these things, we can actually put in place a very, very strong KYC program. I remember the last speaker talking about if you want to mitigate any kind of financial crime risk, it starts with KYC. That's the truth. Money laundering, fraud, sanctions, everything can be resolved with KYC. Strong KYC can mitigate half of those risks. So whether we can get there is another thing. It requires a lot of data, right? Having worked in a place where we had to implement these things is not straightforward. For you to do things like device reputation, it means you have to have access to the device IP, you need to be able to track it, you need to be able to, you know, geolocation, it means you need access, right? I know I was working in a place recently where we were trying to do geolocation, and the truth is, in line with data privacy requirements, you need to tell the customer you're taking their location, right? And if the customer says no, then you can't do it. So there's a lot of intricacies that go into it. But in terms of whether they are required, absolutely. And if there's regulatory backing from the regulators like we have with this draft, and the technology service providers like yourself are able to key in on some of these things, I believe we will then begin to see a very, very steep decline in financial crimes.
Thank you for that. Mr. Ose, you have something to add?
Yes. I think he has covered it, but for institutions, I think bad actors, there's KYC, but also some customers know financial institutions that would be easy for them to carry out their nefarious activities because of the level of KYC. That's why even when you implement your KYC program, it is very important that from time to time you get people to continue testing, continue onboarding, just to see the gaps in your KYC system. Because I know after implementation, you believe that yes, immediately the person puts his name, he will be sanction screened and all that. But there are other pitfalls. So if he's sanction screened and there is a match, can the person transact until the match is disposed? Are you placing a lien on his account that he can receive, or he cannot transact? So what do you do with all the data? We are talking about geolocation now, very excellent. But if you discover the person has traveled to Iraq and the device is in Iraq, what do you do with the data? Because a lot of times KYC is collecting, you are telling me about yourself. But due diligence is, what do I do with what you have told me? The customer has told you, this is where my device is, this is my address, this is the business I want to do. But the institutions have to go further and say, what am I doing with the data that I'm collecting? Because everything you mentioned is beautiful, but where I'm going is, if you do not analyze the data, you are just extracting data. You are not doing your core responsibility, which is due diligence. Yeah.
Okay, thank you, Mr. Ose. I hope my audience is taking notes because we'll be expecting your questions very soon. So I'll go to Mr. Lanre. This is my last question because we've spoken about the regulation, the processes, and so on. So now, usually, institutions are more focused on cost instead of value. So how do we shift the ballroom perception of compliance from cost center to a strategic enabler that protects the institutions and allows for confident growth in a high-risk environment? How do we shift that?
Thank you.
Cost to value.
Yeah, so I think to address that, I think as we are that on the second line or third line, we are facing the financial crime, I think we need to wear the cap of a business enabler first. So when they see you as a business enabler, that conversation is easy for you to have with the execs and other business leaders in your working place. So that needs to happen. So you need to have that mindset first. So compliance is not about kill it, you can't do it, How can we make it happen without infringing on regulation, without having to do something that is illegal? So we need to always find the workaround. So that robust engagement needs to be happening consistently, and you must always have, like in my place where I always say, okay, we must always have a seat at the business leader, at everybody know, which is what we've noticed, and that will happen when you do a lot of data analytics. So we have so much data in our environment that we don't use it. So once you have that data, what do you do with the data? So for instance, in my former place of work somewhere, one of the banks that I worked in the past, so I realized that most of the NGOs that are opening account with my bank, they're from the Northeast. So, and I quickly did some analysis, and I told the business in the area, that means there's a huge funds locked in this area. So how can you block it and get revenue stream from it, and at the same time, you do not abort illicit set of individuals or entities as it were. So when you have that, and you are going to shift the attention of the money to the fact that, okay, so when you want to spend money, say you want to buy a solution, when you have that data and say, okay, this, if we do not buy this solution, this is the fine we stand to pay in the next how many years. So by the time you spread it over time, they would look at the decision of event, they will look at, okay, maybe for last year now, most about 20-something were fined 15 billion naira by Central Bank for AML-CFT infraction. So imagine if that has gone into technology investment. That would have protected those institutions, that would have protected the country as a whole, and that will make the compliance person to sleep very well at night. So those conversations need to happen when you are able to provide the necessary data and also allay the fears of management to the fact that you are not a business killer, you are a business enabler, and you are not out to just spend money on frivolous investment. Of course, before you buy any technology, there has to be vendor evaluation and all whatnot. You have to have your business case well spelled out, your BRD well spelled out, that will show this is what you want to do, so that anybody you are speaking to, you know that you are taking an informed decision that will help your work, that will help the institution, that will also help the country at large. So at the end of it, it's going to be a win-win situation for both you, your organization, central bank, and the country as well. And you make the world a financial crime environment at the end of the day.
Okay, thank you for that. So before I let my panelists go, I would like to thank them, but I would like to also tell a story, okay? So we are all here, I just don't want this to be just another conference or tick boxes for what the regulator said we have to do. So I just want all of you to be conscious that we're doing this because we are building a legacy. I remember there was a man he was dealing with pensioners. He was the one paying them their pensions every end of the month. And then they were complaining all the time that they are not getting paid. Some of them have had areas like 3 months, 1 year, they were not getting paid. Imagine you work all your life, but now to enter into possession of your pension is still a problem. So now, one day, this man was not doing anything about it, and when he retired, because he did not fix the system, he himself went into the same cycle where he didn't get hold of his pension for the whole year, like 1 year, and he was telling his wife that he wants to die. His wife was telling him that, no, you don't have a meeting with death, you will leave. So you see, what you build today is what will protect you tomorrow. Every brick that you are laying today will help you tomorrow. So I want you to take this occasion as a learning curve so that when you go back where you work respectively, you build that value. It's a legacy that you will leave, a culture that you will build for people coming behind you. So that's what I wanted you guys to know. And I thank you my panelists. And we will move to the next one. Diana? Thank you. So, any questions? Okay, yeah, start with you.
Good afternoon. Good afternoon. Thank you very much for that insightful panel. I just have one question, and I'll direct it to Mr. Lanre. I just have a quick question surrounding your opinion about the timeline for implementation. We know that the baseline standards are it's a draft, but they've given a year post publishing for financial institutions to be able to comply. What is your opinion about that timeline, and how can financial institutions maximize it, or does it need to be truncated? Does it need to be extended?
All right, thank you. So, unfortunately, I didn't mention that. So, I've implemented numerous anti-money laundering solutions in the past, and I know from my experience, 1 year is too short for you to have a robust AMS solution well implemented, because you don't want to rush in and rush out, because based on what I've done in the past, you need at least a minimum of 18 months, because we are talking about requirement gathering, then system implementation, then testing, then there'll be post-implementation issues. So usually the ones that I've done in the past, the minimum is 18 months, even up to 2 years sometimes. So because there will be drag with the vendors, you are going to have issues, you might have to roll back on some instances. Then in Nigeria, many a times, the major issue that we usually have when you are doing system implementation is data. So once you don't get the data extraction well, right for an AMS solution, you're going to be getting wrong alerts, and you end up being bogged down with a lot of false positives. So the data extraction and the data modeling has to be right from the onset, because that is what will be the building block of whatever you're going to implement. So 1 year, I believe, by the time the main document is released, they are going to grant, because I know that a lot of people have sent in their comments, so that will be reviewed. I believe strongly that it's going to be reviewed.
Thank you. So we also have other questions here. Maybe we'll direct it to you, Mr. Lagoke. So there's a question here that says, come back again. How ready is the Nigerian banking sector in fighting fraud?
I would say very ready. I take that back. Extremely ready. I think the banking sector has been very hit by fraud. And then I think earlier on this year, NIBS came up with a procedure where if you are found to be culpable, they take some money from you. So if you allow fraud pass through you, they just debit you. So the banks are very, very incentivized to curb fraud. In terms of systems, one of the reasons why there is not a lot of structure around fraud is that there is not a lot of regulations or enough, regulatory guidance around how you do it. So what has been happening is different banks have different programs based on their risk appetite. But generally, in terms of fraud risk, the banks are very ready. And I know that with this circular coming out, and then with most of the inflection coming from the fraud and AML convergence, I know that the banks will be implementing a lot of these things very quickly. Like you said, 12 months is short, but I know that a lot of banks already had, immediately this document came out, they already started working on it, without it being finalized. You want to say something?
Okay, thank you. So the next question is directed to you, Mr. Osei. So how will vendors like LexisNexis help entities that undergo identity screening curb downtime from API integration with government entities storing these data?
So again, with data is garbage in, garbage out. So what is important is LexisNexis, the data that is being used to build the database has to be very clean. It has to, the attributes of the data, it has to be more. I'll give you an example. If you are conducting sanction screening, let's say PEP screening for somebody, for a customer, and then LexisNexis is telling me that because the person's name is Ahmed Mohammed, the person is, let's say, PEP, what would be helpful is on LexisNexis to look at the attributes of the customer, the date of birth, where he was born, and then match it to the result so that it can become like an automatic false positive. Another thing that would also help is we are all sitting on data. We all have, as financial institutions, we have customers that we have off-boarded due to suspicious activities or not. What do we do with that data? Sometimes we file SARs, sometimes we don't. But I'm looking at a situation where if there is increased partnership, maybe there is a database where Sterling Bank is dumping, these are the customers, this is the reason why I off-boarded them. Flutterwave is doing so, Larry's institution is doing so. When that happens, if another person wants to onboard that same customer, it will flag all that, and it would say, it's not like you won't onboard the customer, but you will be able to ask the customer that. They say your character is bad here. What happened? They say you have gone here again. What happened? And that would also improve the results of our KYC, and we have BVM blacklists, definitely, but those blacklists, where are they plugged? Are they plugged into LexisNexis today? Are they plugged into any ID solution? So the regulator, the industry players, they have a lot of work to do with regards ensuring that the data we are sitting on, we use it to make informed decisions. Yeah.
Thank you, thank you. A consortium definitely can work to do that. Thank you. So one last question for Mr. Lanre. So how has international regulators like the OFAC, Office of Foreign Asset Control, the EU, the UN, influenced corresponding banking policies, and how do you stay updated?
It's a very good question. Yeah, they have, of course, whatever we are doing in Africa, I think we borrowed it from them, from the G7. So they are the one that started FATF. So whatever we are doing today, they are the brain behind it, and they cascaded that regulation, the 40 recommendations to any country that are signed on to the UN treaty. So to a large extent, they are the one at the driving seat. They see it ahead of us because at the forefront of technology, they are first. So whatever happens there is being cascaded to us. It's just that what should happen, and I think by way of suggestion is that FATF should incorporate some of the local elements that happen in the African space whenever they are developing policies and processes, so that we have a robust ways of fighting financial crime globally. So not just look at the likes of the US or the European country when you are showing out your laws and regulation. The local context from the African side should be factored into whatever they are doing on an ongoing basis. Thank you.
Okay, thank you. So last question for Mr. Olagoke. So with this new baseline standard in Nigeria, what changes should banks expect in exams in 2-3 years? And how can we align transaction monitoring?
So even now, and for the guys in the bank, they probably can testify to this. The type of testing and audit we have gone through has changed just between the last 2-3 years. I think this year's examination was more control-based. It was more risk and control focused. So previously, you would have examinations come in where they are literally very granular, checking for packages and all that. Now what you have is, how frequently do you test your solution? What is the process flow? How many false positives do you have? How are you bringing down that false positive? What is your process for tuning and all that? With the baseline, if you look at the baseline document, it makes a lot of demands on compliance teams and technology teams as well. It's talking about how the solutions must be interoperable, how the data must be clean, how data must be fed. So I see, in 3-4 years' time, the type of oversight and monitoring from the regulators and even from the global, even from your correspondents, to be a bit, less granular, more of how is your system working as a whole, your technology, your people, your processes. And if we come from that perspective, I think we'll be moving away from this checkbox era where we just, people just do things for the sake of it, and it will be more risk-based, more of a risk-based approach, honestly.
Thank you. So I think we still have 3 more questions.
Okay. Good afternoon, and thank you for the wonderful presentations, the discussions. So I was privileged to be at the last ACOBIN meeting, and one of the feedback from the regulator was that about 85% of the current fraud we have in the financial institutions are actually as a result of insider-related situations, so basically insider fraud. Now, we've been talking about KYC, CDD, sanction screening, and the rest. And I'm sure most of these concerns are focused on the customer perspective, which is like the outside force. Now, relating it to the current trend or the prevailing trend of insider fraud, do you think the current baseline from CBN actually accommodates specific processes that could actually treat or mitigate against these prevailing traits that we're having now? Thank you.
Let me take it. Okay, so thank you for that question. So it's just because CBN just bring back that home. So that's always been there. That risk has been there, insider-related fraud activity. So, but the first thing first is that as an FI or a bank or a fintech, whoever you are, there is that requirement to regulation that says you must carry out a background check on your staff before onboarding. So, and it's not going to be a static thing. So, there's a requirement of AML that says know your employee. So, if that is, and that's the department started with that responsibility in most of the banks is the compliance team. You're supposed to be monitoring your employee account, their lifestyle. So, once you start monitoring that, that will give you, of course, you are not God, you won't see everything, but to a large extent, that will give you a pointer as to if this person is doing the wrong thing. I could remember, let me go back to my former work, there was a guy that we arrested then. So he was in the e-settlement space, so it was the report from NIMS, he was tampering with it, so he had made away hundreds of millions of naira before we realized it. So the day we arrested the guy, meanwhile, his friends, he take them to club in Ikoyi on Friday, they spend millions. This guy, I think, was whether SO, I've forgotten what his level was. So he was spending millions, and none of them deemed fit to raise any flag. Nobody blew whistle on him. So the day we arrested him, we were at the car park. When we opened his boot, he had about 30 pairs of shoes in his boot. And they are all exotic shoes. They are not, then I was talking about 7 years ago, they are not 50,000 naira worth of shoes. So, and his friends knew that this is his level. So when we asked him, they said he's from a rich family. I said, hey, he's from a rich family, why is he working in a bank? He should have set up his own business. So do you get? So the guy now, I think 25 years, we jailed him, we got some property off him. So what I'm trying to say is that it's not just the bank work. You that you work in the bank, and you know that this is his level. You see the kind of car he's driving, the way he's dressing, blow whistle. You have a whistle blow, all the bank, all the FI has a whistle blowing your line, blow whistle. So let them go and investigate. Nothing might not be wrong. If they find him not to be wanted, they will release him. But what of if he's doing something funny? And the risk is not only institutional, it's also societal, and it's also industry-wide risk that we are talking about there. So that risk is there because when you work in the financial services space, you are actually trading with other people's money. So many times, it's 10% of, like now, the share capital has been increased to about 200 billion for National Bank. Some of them their balance sheet are in trillions. So the investors' money in that bank is maybe like 5 or 10%. The balance of 90% belong to you and I, who are bank customers or FI customers. So it doesn't just stop at with the bank doing or the FI doing the background check. We that are employees in that institution, when like saying go, when you are in a train in London, say if you see something, say something. So you have to blow whistle. We have to be on alert. We need to educate our people that if you see something you do not say, it's going to hurt you. It's going to hurt the bank. It's going to hurt the society at large. So that is the way to deal with that kind of thing. Thank you.
Okay, so just also to add quickly, I think it's also important to have access controls with respect to every system or module you have. If you look at your KYC, for instance, it is not everybody in the organization that should have access to the database of the KYC information. Now, what type of access is also different? The read access is different from access to download. So these are some of the restrictions that I know you were expecting to read from the CBN's baseline standard. And as Goke has alluded to, that is the future of audit. So if CBN comes in the next 2-3 years, what they'll be asking is, who has access to this KYC database? Are you saying, where are the audit logs? How often do you review your audit logs? So in addition to the background checks, it's also important that you also implement preventive controls and also detective controls. Which one he has mentioned is whistleblowing. But you have to have like your IT audit department saying who is accessing modules at wrong hours, at suspicious hours. You know that we typically work 8 to 5, but you should have an IT department that is saying between 1 a.m. or between 11 p.m. to 6 a.m. who were the people that accessed this module, and was there a business justification for them to access the module?
Okay, so I just, and they have already covered everything. I think I just wanted to react to the statistics that you shared. So I don't think that statistics is absurd. If you look at the CFE's year-on-year report for fraud, you typically see that insider fraud is always the highest. So it's low in volume, so customer fraud will always have higher volume, but the value is always higher because when insiders hit, they don't hit 5 million or 10 million, they hit hundreds of millions because they are inside. So it's not absurd, that's one. Two, like he said, he mentioned something very critical, which is KYE. I think, and this is just a recommendation, I think even from a regulatory perspective, I think we can begin to look at KYE differently. So if you look at what is in our regulation today, KYE is mostly about just monitoring your customers' your employees' accounts, and all that. I think we can even take it further. If you go outside these shores, there's something they call Chinese walls. There are certain units that they make sure they put as much barriers. I think I saw it on the screen when Vijay was presenting. Chinese walls is you make sure certain units do not interact. Maybe because one person is an imputer or another person is an authorizer. So you make sure that they cannot see into each other's systems and they do not interact. I know when I was in one of the banks, they put the treasury guys on the 15th floor. You can't even go to their office, except they want you to come in. And I think it's in a lot of banks, anyways. You can't talk to them because of, the risk they carry. Then another thing I think is you have to actually risk rate certain units. There are some units that are more prone to fraud. When he was talking, I was laughing because I think the last 2-3 years, all the insider fraud that have been announced have been from the same unit you mentioned. I will not mention the name again. If you caught it, that's fine. So that unit, what we should expect is that FI should start looking at that particular unit and probably putting in more controls, right? Before you go into that unit, they do extensive background check on you. Probably they have dedicated units that are looking at everybody's accounts there. You put in maybe 3-level check, So you apply a risk-based approach to it. I think it's very important that we begin to put additional processes on KYE. And then maybe that will address the question you spoke about, which is technology. So when we start looking at those processes, then we can build technology to automate those processes. Thank you.
Thank you. Any?
Just appreciate our speakers. My question is maybe to one of the panelists from the bank. Also already spoke around collaboration, the effort around collaboration between banks, financial institutions. Are there specific things, because if you look at the guideline, the EMA baseline, right, it's not really saying anything about collaboration between financial institutions, and it's okay. There are regulators. Maybe they don't want to dabble into that. But we've seen that, for example, what the success we've seen with payment processing is ability of banks to come together, NIBs and all of those things. Are there specific things that financial institutions like banks, like FinTech, we had FinTech association here, are there things they are doing together to ensure that they fight for AML and all of these things collaboratively, rather than the competition? We are competitors, fine, but when it comes to issues like this, I feel we should see more of collaborative efforts rather than, and I think this AML baseline will provide an opportunity for banks, institutions to come together to actually do something. I don't know if, as leaders, if there are things that's currently going on that you might want to share with us. And secondly, to partners like LexisNexis, we've seen a lot of activities around introducing solutions to us. I want to ask, are there other approach like transferring knowledge? Rather than just build a solution, invite us on board, compliance engineering is an aspect that we have naturally not focused on as a country. A lot of institutions might have the resources to say, oh, I want to buy KYC, I want to buy due diligence solution. But if you're able to provide a platform where you can train homegrown compliance engineers that understand what it means to have the understanding of build solutions that can work for compliance team and the likes, I think it makes sense than just having us to come buy solutions and all of those things. So I want to confirm if partners like LexisNexis have that kind of program or approach, especially to Africa. Thank you.
Yes?
Okay. So for the collaboration, yes, it's happening. Like we have the Association of Chief Compliance Officers of Banks in Nigeria. They meet on a monthly basis to discuss various issues on how to deal with financial crime in Nigeria. There's Association of Chief Audit Executive of Banks, the Association of Head of Operations. We have them in different categories. But that has helped in a way, but it can be better because what is happening in Nigeria is, I've been here for long and I know that what most banks feel like they see more of competition. Let me use that word. So that synergy is not happening. For instance, I think he spoke about it the other time. Somebody has defrauded Bank A. Even to release the information, they will be hiding it. Meanwhile, if he has gotten away with Bank A, he's going to hit Bank B eventually. So what are the learnings? It's not to make a mockery of you or to say that your processes are porous, no. but you need to share that learnings with the other party so that the person can be prepared and guide against it. So that is what happened. And I need, for that to happen, I think CBN has to come in the sense that there is something that they have in UK, ciphers in UK that for payments, before any payment goes from whether bank, whether a fintech to another institution, it's going to pass through that platform in split seconds. And once there's a match, the funds won't go through. So we need something like that in Nigeria so that all these guys, bad actors, yeah, we have BVN that watch this, but beyond that, anyone that had been confirmed to have defrauded any institution, the name should be on that list so that that person is denied financial services access permanently until he's able to say, I wasn't the one that did it, or he's able to wriggle his way out. Because, for instance, if you do anything illicit in UK and you have found out, you can't open bank account, you can't open any account in UK again. So we need something like that in Nigeria. So maybe when we have that, that collaboration will be intense, and we are going to have a robust collaboration in that regard. Your other question, as to which I think that was for the Nexus team to deal with.
Okay, thank you.
Okay, no, I just wanted to add to what he said. Like he rightly said, I think ciphers, something like ciphers would greatly help. And if you look at what ciphers is like I think they call themselves an NGO. So they are independent. But I know that before you can integrate to platforms like Faster Payments in the UK, you must get integrated with ciphers. So think about if we had something like ciphers in Nigeria, and we said before any financial institution integrates with NIBS, you must connect with ciphers. The fraud will go down immediately because we know these fraudsters. I mean, in buckets, in silos, right? So if we integrate everything together, it's going to be hell for them. So that's one. Then I also think from an intelligence perspective, I think is also lacking. So imagine if we had something like an advisory where maybe on a quarterly basis, we aggregate typologies from every bank or every financial institution. So this is what we are saying. We are saying, I know when I was in fintech, there was a particular state that once you hear the state, you know that there is chargeback and fraud. I don't know whether it's still the same thing. Okay, it's still there. So there is a particular state, chargeback and fraud. We know it. So what you would expect, maybe there is an advisory, we pull together an industry advisory and we share it. And what will happen is that people in that region, they will be put on notice. And then what will happen is it will go down. So once you shine a light on fraud and all these financial crimes, they typically go down. That's all.
Thank you for that. So, okay, last question before we move to the next step of the program. Yeah.
All right, thank you. Can you hear me? Okay. I love this conversation about how ready we are to fight fraud. And I love your input on, yes, we are very ready, Larry. But how ready are we to out your brother or your friend who is into it? That's the question we should ask. Because it's important that we know that these people are all around us. And it is not only on outsiders that you should shine the light on. There are those around you. I love his comment around working long hours, but also I think it's something we have now gotten used to. We work long hours here. But importantly, audit trails. Who assessed the system last? Or what was the person doing? But one thing I was waiting for was access sharing. Why are we still sharing access? It's a very strong conversation that we should have. In fact, if anybody asks me on my desk to share something that is very personal, like work access, I report you. Because why are you requesting for it? You came on board. It means you should have all the accesses required to do your job. I trust you to do your job with your access, not with my access. All right, thank you.
Okay, so I think very valid points you've raised, and that's why I emphasize that when we automate all our AML solutions, the conversations will now be around the risks associated with automated solutions. Taking your point of asset sharing, the IT department should be able to know when computer A has logged into a solution with the access of person B. These are some of the things they are expected to flag, because yes, if you have an access, the expectation is it should be for your system. But then again, if you are sharing the access, either due to any emergency, but the IT team should be able to flag it and ask questions around, okay, what happened? What were the circumstances around this? And that's what I'm saying, the future of your regulatory audits, your third-party audits would be around these questions. They can call somebody in finance that has nothing to do with your sanction screening module and say login. If the person logins, it's a red flag, because what are you doing with the sanction screening module? Your day-to-day activities, your business as usual, does it require you to have access to LexisNexis? And that is why the solution providers, it's very important that when you are marketing these solutions, you also market access rights and also inform the consumer that, do you want to build this control? Who do you want to give admin access? Also advise them on best practices along these lines, so that you are telling the consumer that, yes, I want to make money, but I also want you to comply with best practice around IT, data privacy, and the likes. And I also want you to keep the payment ecosystem safe. Yeah.
Thank you. Thank you for that. Please, a round of applause to our panelists. Thank you. Okay, to carry on, before we move on to the next step of the break afterwards, so we've been talking a lot about regulation, how to prevent crime, how to fight fraud, and so on. So now, I want all of you to remove your hats of head of compliance, of risk, and so on. So I want us now to think like criminals, okay? Like criminals, because you cannot prevent something if you don't know how it works. So I have a scenario for you here. So it's a case study on deconstructing money laundering. So usually we focus much more on financial institutions and individuals. So today I want us to focus on the churches. There's a lot of churches that have been opened around Africa, like mega churches and so on. And they are too prone to financial crime and money laundering. So I have a scenario here where I will want this session to be interactive, where I will want you to tell me, as a member of the church or as a pastor or as a finance person in that church, how would you launder that money? So here's the scenario. A mid-sized religious organization operates in a metropolitan area. It receives large volumes of cash donations weekly and also accepts international transfers from supporters abroad. Over a 2-year period, law enforcement discovers that the church has been used as a front to launder illicit funds from fraud schemes and narcotics trafficking. So, as my fellow criminals, could you please tell me like the key stages of laundering money? How would you do that so that you don't get caught? You can raise your hand, then they will assist you with the mic.
Okay, so the first stage of money laundering, I would overpay my tithes or overpay the offering and also go and meet the pastor and let him know that I have overpaid into the church account, that I need him to refund, but to someone else that is not in the country, that's the account I want them to pay the money back into.
Okay, that's fair. Another hand.
Okay, so let me act like a criminal. Okay, so one thing I'm going to do is I will make sure I enter the system, the church system, volunteers in different sectors, and ensure that I'm managing some finance of the church. So I know that this money is coming and I need to move this money. So once then I'll create, what is it called, some complaints. So I'm the one leading this unit, right? We have a project, we want to build a building. So I'm going to like, okay, because I'm in charge of this, it's my company that is going to sell this product to you. So instead of selling the product at 10 naira, I know I'm already selling it at 100 naira. But because they are the major sponsors of this event, so the church won't talk. And through that, we've laundered the money, we've brought the money back into the system, we've cleaned the money, and the money is back into this, integrate the money into the system. So those are the things I'll look out for. And what advice will I give to the pastors? I always like, in church right now, sir, don't let someone be checking this. And I think some churches are now employing accountants, employing legal people to ensure that they are not using their church as a means for money laundering.
Okay, fair enough. Another, there's a hand there, okay.
Okay, good afternoon. So my question is it the church that is laundering the money or me as a person?
At the church, you can be the pastor or the finance person within the church.
Okay, so I think for me, if you said the church has a narcotics, okay, so that means if there's any money coming in through the church, we get offerings, right? We get tithes and all that. So it's possible for us to use that opportunity. So whenever there's a weekly meeting weekly meeting, we get monies and we had the monies from our narcotics ring or whatever it is that we are doing. We can transfer the monies, open up ghost projects and route it through those projects. And that's how money comes in or probably goes out. So it's just through projects, we're doing one thing or the other, but underneath, we're actually running laundry money. Thank you.
Thank you. A good criminal. Another hand.
Thank you very much. And I think, FATF's second recommendation says there's collaboration, need for collaboration. Things are mirror images of themselves. If there's collaboration in the good one, what if I collaborate with the pastor? Yes, I do. I move money. Not every pastor is a pastor. I move money to him. I place it. I say, please, move and collect your cut. And it's very simple. We run the things and we move. Thank you.
Thank you. Another hand.
Hey, Fabrice. So this is an interesting question. So I thought it'll be good to give a couple of examples of how to effectively launder money. Right? So I'm a supplier. I need to launder money. What I do is I basically go to the church, give them a contract. They basically come, let's say in a church in a week, you have 100 people coming into the church. I'll say 1,000 people came in the church. And this is the cost. So the church then has to pay the supplier. Only 100 people ate the food, but I'll say 1,000 people ate the food. And obviously the traceability is easy because 1,000 people ate the food. So then the church pays the contractor, and the contractor treats it as a legitimate organization and therefore files taxes. The money goes into the system as white. So you do that every week, small amount of money. Over the year, you can very easily launder £1 million.
All right, thank you. So we'll have one say. Okay. Yeah, one last one. Or two, you can start. Yeah, it's fine.
Okay, so I'm not a launderer or a thief, but there are actually real-life examples that happen in this country on this perspective. So you find, just like he said, Vijay said, you find churches that are not so big, building in areas where you can't even fathom how they made money to, or they got donations for it. So a church, I just want to give an example on something that would happen. A church comes out and says they want to build a project in Eco Atlantic, right? And they have what you call Project Sundays. So every Sunday, they come with large bags of cash, right? And they say they received it from members of the church and deposit it in the bank, right? And tell the bank that they are opening an account for the building of a church. And there's a building project. And they have, vendors, contractors, people that supply, steel and all of that. And you find that they overinflate those invoices and they pay these so-called vendors. But you find out that these vendors or suppliers are the people that actually own the money. So something like that happens. Thank you.
Okay, thank you. Okay, one more hand and then.
Okay, so basically, I'm not a fraudster as well, so, but, as a pastor, I could say, okay, I could liaise with these fraudsters and say, okay, paying, pastors are used to saying pay seeds, donate seed, come out, so there could be some alignment between these two parties, and as such, they'll say, okay, this seat, this set of, congregation had paid would embark on a project, and such project are ghost project, and as such, London Money Trader Act, and they just make it clean. So basically.
Okay, thank you. All of you are correct. But there are key stages. It's all what you said are regrouped in 3 stages, where you have the placement. So the placement is where you structure the cash into multiple small deposits, okay, into the church's bank accounts. And then the second stage is layering. So the layering is basically when the funds pass through multiple jurisdictions with weak AML enforcement. So lay it across multiple jurisdictions. And then you have integration, where the proceeds appear clean and detached from their criminal origins. So I would like to thank all of you for your participation, and thank you for participating. Thank you. Okay, also, lunch is open. You can now, on the 2 sides, you can now go and help yourselves. Thank you.
Okay. Ladies and gentlemen, this is a great one. Thank you very much. Lunch is going to be served. Please be mindful of your personal items. So this is what we're going to do. There are 2 stations, but by the side, my left and my right. And then we have 2 different sets of meals. So if you're going for rice, please stay on one queue. If you're going for solid, stay on the other queue. As soon as we're able to wrap up with that, we will go into the last session for today. Please do not leave. We have a special poll as well as a particular aspect of the event which we all need to be engaged in. and then we will all have a total group picture, and then we will call it a day with our closing remarks. So there are two sides on my right and left, and there are two sets of meals. So please ask which one you have and go into the line. So you do not queue on a one single line. Make two lines, one for solid, one for the other one. Thank you, ladies and gentlemen. Over to you, GH Productions.
over 5 decades, we have been at the forefront, working behind the scenes to ensure your business can transact with confidence around the world. As part of Relix, LexisNexis Risk Solutions has grown organically, and we have expanded our capabilities with innovative technologies to strengthen our DNA, making us more versatile and transformative. Our ongoing investments ensure our offering remains state-of-the-art, capable of handling complex challenges with increased efficiency and reliability. Advances in our portfolio include enhancing our fraud and identity solutions with global digital identity and device intelligence, delivered through an advanced fraud detection engine, behavioral insights to help detect non-human or abnormal interactions, and a powerful fraud risk scoring solution fueled by email intelligence, all ensuring a smooth and secure experience for your customers. We've strengthened our financial crime compliance offerings by incorporating comprehensive risk data, advanced transaction screening, account screening, and thorough trade compliance solutions, along with industry-leading systems for reducing false positives. We're the pioneers in all-in-one compliance solutions. We have also elevated our payments efficiency solutions with global real-time data for enhanced transparency, faster validation, and effortless domestic and cross-border transactions, providing you with a definitive single source of financial counterparty KYC information to minimize the risk of failed payments and deliver a frictionless customer journey. And we have our risk orchestration platforms connecting organizations to the right capabilities at the right time, enabling scalable risk management that evolves with your needs. LexisNexis Risk Solutions, providing risk insights to ensure you are risk ready, transforming a safer tomorrow together, protecting the everyday. It's in our DNA. For over 5 decades, we have been at the forefront, working behind the scenes to ensure your business can transact with confidence around the world. As part of Relix, LexisNexis Risk Solutions has grown organically, and we have expanded our capabilities with innovative technologies to strengthen our DNA, making us more versatile and transformative. Our ongoing investments ensure our offering remains state-of-the-art, capable of handling complex challenges with increased efficiency and reliability. Advances in our portfolio include enhancing our fraud and identity solutions with global digital identity and device intelligence, delivered through an advanced fraud detection engine, behavioral insights to help detect non-human or abnormal interactions, and a powerful fraud risk scoring solution fueled by email intelligence, all ensuring a smooth and secure experience for your customers. We've strengthened our financial crime compliance offerings by incorporating comprehensive risk data, advanced transaction screening, account screening, and thorough trade compliance solutions, along with industry-leading systems for reducing false positives. We're the pioneers in all-in-one compliance solutions. We have also elevated our payments efficiency solutions with global real-time data for enhanced transparency, faster validation, and effortless domestic and cross-border transactions, providing you with a definitive single source of financial counterparty KYC information to minimize the risk of failed payments and deliver a frictionless customer journey.
Listen, LexisNexis has ensured that we have a very wonderful, sumptuous lunch. So please understand that there is enough food to go around. Please make sure you have a few. And this is courtesy of LexisNexis Risk Solutions. But when you do that, please make sure you understand the risk as well. But please enjoy your meal, have everything you can. The food is paid for and sponsored by LexisNexis Risk Solutions. Please, ladies and gentlemen, so we don't have our food just lying there. Then one has to be shy. So please, avail yourself of this meal and have a great feel. And please do not leave after the meal, because we still have the final session, and then we'll have still the networking reception, where we also have another break. So this is not just about risk alone, it's about having great hospitality as well. Thank you.
As part of Relix, LexisNexis Risk Solutions has grown organically, and we have expanded our capabilities with innovative technologies to strengthen our DNA, making us more versatile and transformative. Our ongoing investments ensure our offering remains state-of-the-art, capable of handling complex challenges with increased efficiency and reliability. Advances in our portfolio include enhancing our fraud and identity solutions with global digital identity and device intelligence, delivered through an advanced fraud detection engine, behavioral insights to help detect non-human or abnormal interactions, and a powerful fraud risk scoring solution fueled by email intelligence, all ensuring a smooth and secure experience for your customers. We've strengthened our financial crime compliance offerings by incorporating comprehensive risk data, advanced transaction screening, account screening, and thorough trade compliance solutions.
We're going to start up the
along
next
with
session
industry
perhaps in the
leaders
next
reducing false
few
positives.
minutes, so please enjoy
We're
your meal.
pioneers
Bon
in
appetit.
all-in-one compliance solutions. We have also elevated our payments efficiency solutions with global real-time data for enhanced transparency, faster validation, and effortless domestic and cross-border transactions, providing you with a definitive single source of financial counterparty KYC information to minimize the risk of failed payments and deliver a frictionless customer journey. And we have our risk orchestration platforms connecting organizations to the right capabilities at the right time, enabling scalable risk management that evolves with your needs. LexisNexis Risk Solutions, providing risk insights to ensure you are risk ready, transforming a safer tomorrow together, protecting the everyday. It's in our DNA. For over 5 decades, we have been at the forefront, working behind the scenes to ensure your business can transact with confidence around the world. As part of RELX, LexisNexis Risk Solutions has grown organically, and we have expanded our capabilities with innovative technologies to strengthen our DNA, making us more versatile and transformative. Our ongoing investments ensure our offering remains state-of-the-art, capable of handling complex challenges with increased efficiency and reliability. Advances in our portfolio include enhancing our fraud and identity solutions with global digital identity and device intelligence, delivered through an advanced fraud detection engine, behavioral insights to help detect non-human or abnormal interactions, and a powerful fraud risk scoring solution fueled by email intelligence, all ensuring a smooth and secure experience for your customers. We've strengthened our financial crime compliance offerings by incorporating comprehensive risk data, advanced transaction screening, account screening, and thorough trade compliance solutions, along with industry-leading systems for reducing false positives. We're the pioneers in all-in-one compliance solutions. We have also elevated our payments efficiency solutions with global real-time data for enhanced transparency, faster validation, and effortless domestic and cross-border transactions, providing you with a definitive single source of financial counterparty KYC information to minimize the risk of failed payments and deliver a frictionless customer journey. And we have our risk orchestration platforms connecting organizations to the right capabilities at the right time, enabling scalable risk management that evolves with your needs. LexisNexis Risk Solutions, providing risk insights to ensure you are risk ready, transforming a safer tomorrow together, protecting the everyday. It's in our DNA. For over 5 decades, we have been at the forefront, working behind the scenes to ensure your business can transact with confidence around the world. As part of RELX, LexisNexis Risk Solutions has grown organically, and we have expanded our capabilities with innovative technologies to strengthen our DNA, making us more versatile and transformative. Our ongoing investments ensure our offering remains state-of-the-art, capable of handling complex challenges with increased efficiency and reliability. Advances in our portfolio include enhancing our fraud and identity solutions with global digital identity and device intelligence delivered through an advanced fraud detection engine, behavioral insights to help detect non-human or abnormal interactions, and a powerful fraud risk scoring solution fueled by email intelligence, all ensuring a smooth and secure experience for your customers. We've strengthened our financial crime compliance offerings by incorporating comprehensive risk data, advanced transaction screening, account screening, and thorough trade compliance solutions, along with industry-leading systems for reducing false positives. We're the pioneers in all-in-one compliance solutions. We have also elevated our payment sufficiency solutions with global real-time data for enhanced transparency, faster validation, and effortless domestic and cross-border transactions, providing you with a definitive single source of financial counterparty KYC information to minimize the risk of failed payments and deliver a frictionless customer journey. And we have our risk orchestration platforms connecting organizations to the right capabilities at the right time, enabling scalable risk management that evolves with your needs. LexisNexis Risk Solutions, providing risk insights to ensure you are risk ready, transforming a safer tomorrow together, protecting the everyday. It's in our DNA. For over 5 decades, we have been at the forefront, working behind the scenes to ensure your business can transact with confidence around the world. As part of RELX, LexisNexis Risk Solutions has grown organically, and we have expanded our capabilities with innovative technologies to strengthen our DNA, making us more versatile and transformative. Our ongoing investments ensure our offering remains state-of-the-art, capable of handling complex challenges with increased efficiency and reliability. Advances in our portfolio include enhancing our fraud and identity solutions with global digital identity and device intelligence delivered through an advanced fraud detection engine, behavioral insights to help detect non-human or abnormal interactions, and a powerful fraud risk scoring solution fueled by email intelligence, all ensuring a smooth and secure experience for your customers. We've strengthened our financial crime compliance offerings by incorporating comprehensive risk data, advanced transaction screening, account screening, and thorough trade compliance solutions, along with industry-leading systems for reducing false positives. We're the pioneers in all-in-one compliance solutions. We have also elevated our payment sufficiency solutions with global real-time data for enhanced transparency, faster validation, and effortless domestic and cross-border transactions, providing you with a definitive single source of financial counterparty KYC information to minimize the risk of failed payments and deliver a frictionless customer journey. And we have our risk orchestration platforms connecting organizations to the right capabilities at the right time, enabling scalable risk management that evolves with your needs. LexisNexis Risk Solutions, providing risk insights to ensure you are risk ready, transforming a safer tomorrow together, protecting the everyday. It's in our DNA. For over 5 decades, we have been at the forefront, working behind the scenes to ensure your business can transact with confidence around the world. As part of RELX, LexisNexis Risk Solutions has grown organically, and we have expanded our capabilities with innovative technologies to strengthen our DNA, making us more versatile and transformative. Our ongoing investments ensure our offering remains state-of-the-art, capable of handling complex challenges with increased efficiency and reliability. Advances in our portfolio include enhancing our fraud and identity solutions with global digital identity and device intelligence delivered through an advanced fraud detection engine, behavioral insights to help detect non-human or abnormal interactions, and a powerful fraud risk scoring solution fueled by email intelligence, all ensuring a smooth and secure experience for your customers. We've strengthened our financial crime compliance offerings by incorporating comprehensive risk data, advanced transaction screening, account screening, and thorough trade compliance solutions, along with industry-leading systems for reducing false positives. We're the pioneers in all-in-one compliance solutions. We have also elevated our payment sufficiency solutions with global real-time data for enhanced transparency, faster validation, and effortless domestic and cross-border transactions, providing you with a definitive single source of financial counterparty KYC information to minimize the risk of failed payments and deliver a frictionless customer journey. And we have our risk orchestration platforms connecting organizations to the right capabilities at the right time, enabling scalable risk management that evolves with your needs. LexisNexis Risk Solutions, providing risk insights to ensure you are risk ready, transforming a safer tomorrow together, protecting the everyday. It's in our DNA. For over 5 decades, we have been at the forefront, working behind the scenes to ensure your business can transact with confidence around the world. As part of Relix, LexisNexis Risk Solutions has grown.
All right, ladies and gentlemen, we're getting set for the last session of the Risk Ready Nigerian 2025, which is the Power Panel. I'm very sure my panelists are on cue. Mr. Festus Amide, Mr. Lanre Adeshomo, Mr. Olagoke Saeed Salahu, and of course, Mr. Vijay and Rowan is going to be on ground to help us, navigate this ship, as the case is. I hope you're enjoying your meal. Please understand that there is still food for you so that you can have a good time. And afterwards, we have the final session after the goodwill, as well as closing remarks. And we'll wrap up this year's edition of the program. Thank you, ladies and gentlemen. Hope you're enjoying your meal.
And thorough trade compliance solutions, along with industry-leading systems for reducing false positives. We're the pioneers in all-in-one compliance solutions. We have also elevated our payment sufficiency solutions with global real-time data for enhanced transparency, faster validation, and effortless domestic and cross-border transactions, providing you with a definitive single source of financial counterparty KYC information to minimize the risk of failed payments and deliver a frictionless customer journey. And we have our risk orchestration platforms connecting organizations to the right capabilities at the right time, enabling scalable risk management that evolves with your needs. LexisNexis Risk Solutions, providing risk insights to ensure you are risk ready, transforming a safer tomorrow together, protecting the everyday. It's in our DNA. For over 5 decades, we have been at the forefront, working behind the scenes to ensure your business can transact with confidence around the world. As part of Relix, LexisNexis Risk Solutions has grown organically, and we have expanded our capabilities with innovative technologies to strengthen our DNA, making us more versatile and transformative. Our ongoing investments ensure our offering remains state-of-the-art, capable of handling complex challenges with increased efficiency and reliability. Advances in our portfolio include enhancing our fraud and identity solutions with global digital identity and device intelligence delivered through an advanced fraud detection engine, behavioral insights to help detect non-human or abnormal interactions, and a powerful fraud risk scoring solution fueled by email intelligence, all ensuring a smooth and secure experience for your customers. We've strengthened our financial crime compliance offerings by incorporating comprehensive risk data, advanced transaction screening, account screening, and thorough trade compliance solutions, along with industry-leading systems for reducing false positives. We're the pioneers in all-in-one compliance solutions. We have also elevated our payment sufficiency solutions with global real-time data for enhanced transparency, faster validation, and effortless domestic and cross-border transactions, providing you with a definitive single source of financial counterparty KYC information to minimize the risk of failed payments and deliver a frictionless customer journey. And we have our risk orchestration platforms connecting organizations to the right capabilities at the right time, enabling scalable risk management that evolves with your needs. LexisNexis Risk Solutions, providing risk insights to ensure you are risk ready, transforming a safer tomorrow together, protecting the everyday. It's in our DNA. For over 5 decades, we have been at the forefront, working behind the scenes to ensure your business can transact with confidence around the world. As part of Relix, LexisNexis Risk Solutions has grown organically, and we have expanded our capabilities with innovative technologies to strengthen our DNA.
All right, ladies and
Making us
gentlemen,
more
we're getting
versatile
set for
and
the final
Our ongoing
aspect of today's
investments
program, and
ensure
then we
our
have the
offering
closing
remains
remark.
state-of-the-art,
Please
capable
understand
of
that
handling
we have a new
complex
QR
challenges
code
with
for the
increased
game,
efficiency and
so make
reliability.
sure you take an advantage of that. And I want to say a big, wonderful appreciation to every single one of you who have been interacting, especially on Slido, and of course playing the game. And it has been quite confusing for some of us, as a matter of fact. And that's part of the essence of why LexisNexis Risk Solutions is having this forum. It's important for us to be able to understand that a lot of the objectives which I've set out earlier on obviously has been met. But I'd like to announce that this final panel session, the power panel, is one that is going to engage every single one of us. So please, whatever question you have on the Slido, please keep bringing them up, and we're going to obviously explore them. And that's part of the essence of why we are here. Earlier on, I was at the F&I session, and it was quite very engaging. I wished we had more time. I've not anchored an event where I was not in a hurry for a session to end. I guess fraud is very, very dear to our heart, and we have some of the concepts and the ideas and experiences, especially from the bankers, and seeing exactly why it is important that we put the customer first. It's all about the customer experience, and I'm glad that we've done well. And so, ladies and gentlemen, please, can we put our hands together for LexisNexis Risk Solutions? Please put your hand together. If you are busy with your plate, you can just tap your glasses without breaking Lagos Continental's dish. All right, thank you. I hear you. I hear you. All right, ladies and gentlemen, this is the final session that is going to be wrapping up this event. But somebody was very magnanimous, and they dropped their phone for me. So I want to say a big thank you to the person who has given me this phone to take home. Mr. Festus, are you checking whether you are the one? Mr. Festus, you see the things with these bankers, they like to be, just do giveaways. This is what exactly it is. Mr. Festus, thank you for the phone. I'll make sure that, phones these days are not cheap any longer. With $500,000, $1 million or thereabout, that is where you get one. So I want to say a big thank you for the gift. I'll make sure every time I use the phone, I remember you with fond memories. So ladies and gentlemen, at this point, we will move into the final panel session. And that session is the power panel, which, as a matter of fact, gives me all the most excitement because it has to deal with part of... Are you the owner? No. We found the owner now. Okay, Festus, what is going on? Oh, you thought it was yours. Yeah? Is this yours? Are you sure? Do you have facial recognition? Fingerprint. Okay, let us have the fingerprint first. Hold on, no. Please, can you clean your finger so that we know that it's not any... All right, let's have the... It's by the side. Okay. All right. You're welcome. And then you obviously did not even know that your phone was not with you still. Please, let's be mindful of our personal items. That is what I've been announcing all the while, so that we don't have any case that is going to be one we're not so happy about. Thank you very much. It's good to see you that you've, as a matter of fact, received your phone back. And that is why it's important for us to be very mindful. Now, the panel section, the FREMIL, as a matter of fact, is one that is going to bring together senior leaders from banking, fintech, risk management, of course, the public space, as well as those practicing, looking at the central theme, which is the convergence of fraud and AML, anti-money laundering, as well as the FREMIL. And this session is going to be quite robust. We're going to look at some of the areas we've not been able to attend to. And so it gives me great delight to invite to the high table or the podium here the moderator for this session, Mr. Kiran Rowan. Please, can you put your hands together for Kiran Rowan? He's going to be moderating this session. Please put your hands together for him. Can we have the extra microphone? I'm very sure we should have one or two with which we'll... So Kira, where will you want to sit, here or at the edge? Whichever works for you. Okay, all right. Okay, to join him is no other person than my very good friend, who, as a matter of fact, is presently the current chairman of the Committee of Chief Information Security Officers of Nigerian Financial Institutions, and is the Group CISO of Zenith Bank PLC, Mr. Festus Amede. Please, can you put your hands together for him? A renowned cybersecurity professional. His engagement at the F&I session was quite very robust, and I'm so excited about being a part of that aspect of the fraud breakout session. I want to say a big thank you for being here today. And to join him is the head of, to join him is currently the head of the Financial Crimes Compliance Department at Sterling Bank, Mr. Olagoke Sayid Salawu. Please, can you put your hands together for him? You're welcome, sir. I'm not too sure I saw you at the F&I session. You were here at the FCC. Oh, no wonder. You're welcome. And so to join them, the last but not the least, we have Mr. Vijay Nagarajan, the Director of Marketing Planning at LexisNexis Risk Solutions, a global leader in financial crime, fraud, and payment solutions. And I guess my very good new friend today, we actually was going through the Banker's Almanac and how that actually spanned out. Thank you so very much for being here. So, and I know that some of us are going to engage even from the floor. And I'm looking forward to more of the interaction from Intakisha. I'm personally going to mention you. I wish you were up here, but nevertheless, we'll look at some of those engagements. So, ladies and gentlemen, please, can I have the QR code, the new QR code for the games to be actually uploaded on the screen so that people can actually have that grabbed? And then we have the Slido is still ongoing. Can you use the Slido platform? And those are the two sessions that were held. We have one or two stuff to be able to, see if we can, dish out at the end of the day. But we're going to be waiting at the closing remarks to see how that goes. So, ladies and gentlemen, your Slido is on hand. And then right now, I'm going to hand over to Kira. Over to you, sir.
Yeah, thank you. Thank you, tech support. Okay, well, thank you very much, everyone, for joining us today. I hope you've had a good morning and a good lunch, and it's everyone's keen for more discussion about fraud, AML, and how we can help improve things in Nigeria. So I'm joined here today by a couple of experienced professionals who I'm delighted to have join us. And I'd like to start off the discussion really focused on a question around onboarding. So when the theme of this panel is broadly fraud and AML and the combination thereof. And onboarding is a key point in the customer life cycle that touches on both aspects. So protecting the business financially, protecting the identity of the persons being registered at that business, and indeed protecting from fraud, and meeting the compliance obligations that should be undertaken. So my question to the panel is, how are we seeing Nigerian financial institutions orchestrate and deal with the varying different touch points of information, whether that's BVN data, whether that's NIN data, whether it's broader fraud or consortium data, and how is that best orchestrated so that there's a joined up approach and a good holistic view of the customer being registered? And if I could point that at yourself.
So I think, and thank you for that question, Karen. If you look at what we have, I think as financial institutions, we kind of have a largely laid down process flow for what we need to do. So we have, guidelines that have come out. We have the CBN customer due diligence regulation that came out in 2023. We have the PEP management framework. We have the UBO framework, and then we also have the BVN and NIN guideline that came out in 2023 as well. And it kind of tells you what you need to do. You must start with BVN, you must match it with NIN and all that. The point I'm trying to make anyways is that for elementary parts of KYC, it's very clear what needs to be done. However, we have moved past that. We have so many kinds of channels now that we provide services through, and a lot of these things no longer meet that requirement. I was listening to Sam Altman from OpenAI, and he was saying, if you still rely on voice prompts or facial recognition for KYC, then you're in the past, because deepfakes is going to blow you out of the water. So at this point, we need to start rethinking KYC as a whole. How can we make KYC more rudimentary? How can we make KYC foolproof? So I think while we have those processes in place, I think there needs to be a lot of innovation, a lot of intuitiveness in the industry around how we want to do these things. Another thing, for example, is address verification. If I were to throw a question to the House around how does everybody do address verification, I'm sure you hear a lot of different answers. The guys in the banks do physical verification, some guys do geolocation and all that. And really, for example, if you ask the guys who do geolocation, do you understand how that geolocation works? A lot of people probably don't. And it goes down to what you were talking about, the black box effect. I know when you speak to a lot of vendors, explain to me how you do the geolocation, it suddenly becomes very, very complicated, right? So to make, just to kind of round off, the point is, in terms of KYC as a process, yes, there are steps in Nigeria to guide you around how you must do KYC, but every institution needs to then begin to understand their risks, right? So if you are a fintech and most of your customers are, you acquire customers digitally, then probably a lot of the guidelines around the regulation might not be sufficient for you. So you have to take that advancement. If you have unique risks, in terms of geographies, for example, then you might want to do something additional. Physical verification, geolocation tracking, and all that. So it's really nuanced. So the processes, the technology built on it.
Thank you. That's very, very interesting. Festus, do you have any thoughts on the matter?
All right. Good afternoon, everyone, and thank you, Lexis Nexus, for putting this together. Talking about KYC, KYC is very, very important for banking business, because you see a lot of transaction flowing, and if we can get onboarding right, we'll be able to reduce over 50% of the fraudulent challenges we're having today in the industry. Because the moment you introduce the wrong person into the banking system, not only will the person even be a destination for fraudulent practices, but that account can also be used to exploit weaknesses in any banking application. So compliance, like Goke said, we are not lacking compliance. The regulation is there on what the bank should do, the necessary KYC for different tiers. But the challenge also has to do with ignorance, to ensure that people don't give out their identity. But even when those things happen, I think most importantly is the bank to go a step further. Because what regulation does is to give you minimum requirements. For security and the protection of the customer, we have to do more. And that is why earlier in the day, a lot of ways have gone into liveliness check to make sure that when someone is opening an account and you are using either the BVN data or the NIN data, can we ascertain that that person is actual owner of those data? Because unfortunately, some of those data had found themselves in the public space from some of the headlines we saw, which now requires that you have to trust but verify. Can we validate that those customers who are bringing into the system are actually who they say they are? And that is why liveliness check and also ensuring that the phone number or the email address used for onboarding are also validated, that the person coming into the system is the actual owner of those details. That is why you see OTP being sent to phones, or we also send to emails. All this in an attempt to make sure that you know the customer. But over and above KYC is also KYB, know your customer's business. It's not just enough knowing the customer, but you also need to know the business so that somebody will not tell you that is a retail groundnut seller, and few days later, millions of naira is flowing through the account. And you know that such business cannot produce such funds. And they now become a mold for even moving illicit funds. I think that is why KYC, KYB is very, very important. Then, as time goes on too, there is need for you to ensure that we are validating. I think the major challenge in this part of the world is that when people even, let's assume when the account was opened, addresses were verified, either by physical visit, by consultant and all that. In most climate, I see a situation where, if you go to the Western world, you see a situation whereby if your address changes, your driver's license, your health card, everything become invalid. You need to go and update the new address. But we don't do that here. So people change the address. Maybe the time they opened the account, they were in the village. Now that they're in Lagos, address has changed. Who is validating that address? So regulation also need to do more. There is need for us to ensure that when people change this address, all documents need to align with a new address so that when something happens, we can trace whomever the person is. That is when we're able to handle some of the fraud and some of the anti-money laundering we see today. Thank you.
Thank you. Oh, please go ahead.
So just to, and Mr. Festus made a very good point, which I just want to kind of piggyback off. When he spoke about transactions, it also ties down to what you presented about perpetual KYC, which is, you know, the wave in the Middle East. And this is just something I've always thought about. You know, from customer transactions, you can also do KYC, right? So if a customer has told you, I live in Lagos, but all his transactions, maybe he does a lot of physical transactions. I'm talking about in a bank, for example. I know his physical transactions are in Abuja. Then you should ask a question, right? Why are you always in Abuja when you claim that you're in Lagos? And the point here is that at every point in time, we should always kind of, again, it goes back to what I said in the previous session. The first point, onboarding KYC, is just the minimum. And you should always test that information you have collected at that point and continue to validate it. So if, for example, somebody has said, my expected annual income is 10 million, you should, with his transactions, with his behaviors over the life cycle, you should be able to tell, well, this person is clearly not doing 10 million, and update that. And with that, feed into the customer's KYC. And then that should also fit into other things like risk profiling, for example. So what you see a lot of times is you onboard a customer, you do your KYC, you risk rate the person low risk, and then you leave it there. But ideally, and if you look at the CBN guideline, it says something called dynamic risk profiling. So what that means is that if a customer is low risk in the morning, if he does certain kind of activities, it can be high risk by evening. And if there is more assurance by next tomorrow, he can be back to medium risk. So to LexisNexis, I think these are things that we need to start looking at. How can we get real-time data, from KYC every day, and that it can help trigger changes to the customer's KYC profile and risk profiling dynamically on an ongoing basis?
Yeah, no, I think it's the freshness of that data, the consistency within either a transaction or a customer's wider behavior. These are all really important signals that can help you identify that something is worth further investigation, whether that's additional due diligence, whether it's a refresh of the KYC, a refresh of the onboarding overall. These are steps that could be relevant in those situations. And I think I like that we've brought it back as well to the bundling up and, I guess, holistic assessment of all of that information into risk ratings, which is, because you've got diverse sets of information, whether that's information the customer gave you, information that you get from maybe the BVN check, information that you might get from your fraud supplier, information that you might get from any other sources, even AML screening and so on. Bundling all that up and having the joined up picture of risk is a really important concept, I think. So my next question is for you, Olagoke. So in terms of AI-enabled fraud, do we think that Nigerian banks are prepared for this new wave of attacks and threats, whether that's from deepfakes to automated phishing? We've already heard your thoughts on voice cloning. But yeah, how are banks and how are you responding, and what controls are giving you the most effective impact on that issue?
So whether banks are ready for AI-enabled fraud, we can't say now. The reason why I would say we can't say now is because I can't say for certain that fraudsters here have started adopting those typologies yet, because maybe there is no need to. So fraudsters will always, they will always expend the minimum amount of resources to get the maximum gain. So if they don't need, I think the last panelist mentioned it. Today, the financial landscape is so siloed that you can apply the most minimal techniques, rudimentary techniques. And if it doesn't work here, you can try it in another place because we don't share information. So if somebody attacks my financial institution and for whatever reason the person fails, I probably wouldn't share it with the next bank and next, and all that. So what that allows is that the threat vector is very wide, and you can, as a fraudster, you can test different places until you get it. So what that has also done is that it has also made the fraudsters here not try, things that are overly complex or overly difficult. But in the next 4 or 5 years, we will say that. I know there was a video circulating about 6 months ago of some guys who did a deep fake, and they had the Asian person's face, but they couldn't speak like the person, right? But all those things with agentic AI and all these things, all those things are going to be cleared out very soon. So very soon, we'll be able to have agentic AIs that will be fraud. They'll be created with the intent of fraud, right? Digital personas that carry out fraud. And one thing you realize about the Nigerian banking sector is that they react very quickly once money is involved. Once money is involved, they move very nimbly. So I have no doubt that the banking sector will react very quickly. My concern really is around the other players in the financial sector. So today, there are some players that are more exposed to technology-based financial crimes. For example, the PSSPs, the guys who create payment gateways and all that. They have their own unique financial crimes. There is merchant laundering there. There's transaction laundering. For example, merchant laundering is something that people don't talk about, wherein people literally create fake websites, open shell accounts or shell companies, and then they use that to launder millions and millions and millions of naira and dollars. And we see it in the bank, right? Sometimes you reach out to a particular third-party payment provider, and you're like, this person you are facilitating transactions for, who are they? And when you dig a bit deeper, there is nothing there. And that particular TPP has done billions of outflows on behalf of that entity. So I really see more risk to the adjoining financial institutions who are more tech-enabled, and I see a lot of fraud risk there, enabled by some of these things, by deep fakes and all that. In terms of banks, not yet, maybe in the future, but I do know that they will react very, very quickly.
Yeah, I think there's a high possibility that this just accelerates that flywheel for fraud innovation, and accelerates just the pace and volume at which threats come through. So yeah, I fully agree with you, and I think that it's definitely something that we have to keep a close eye on. It's interesting how these things sort of come back circle as well, because what you described sort of touches a little bit on Festus' earlier point around know your customer's business. So why is that pizza shop processing that much money? Why is that flower shop processing the amount of money that maybe should go through a crypto exchange?
And just also, when you said it, something came to my mind around fake passports. I think I was looking online recently and I saw that you can literally tell agentic AI to create a synthetic ID full. It will give you like an international passport, a Nigerian international passport with a face looks Nigerian and all that, right? And it goes back to the first question around KYC. So if you have a platform where you do not do validation, for example, which goes back to what Mr. Festus said, and I think on the other panel where we talked about the importance of due diligence, then your system is already beat. If what you call KYC is just looking at documents on the face value, then technology is going to finish you completely. There is nothing around it, right? So that's the importance of where you now need to do the validations, the screening, the checking against independent database. If not, you really be in a world of hurt.
I think that brings the entire topic to the discussion on the panel that we are having today, right? So it's not just taking a siloed look of AML and doing the things right because a regulator has asked us to do it, or we did the due diligence and we found the risk-based approach is correct or not. Right? So that's one view of looking at it and looking at the world. When it comes to fraud, and especially fraud as a service, I think in the audience, it is Precious who came in during the break and then said, what about bots? How do you defend against bots? How do you defend that fraud as a service? So then in that case, it's connection of data and connection of information across and reacting to that information at any point of time, including dynamic KYC for due diligence is where the solution lies, because that's the only way you're defending. So in AML KYC, you're doing the due diligence, so which means you're checking the box and feeling comfortable. But when it comes to fraud, it is defense. So the more defense you have, the lesser it gets breached. So therefore, the intention is how do we then set up multi-point of defenses, and how do we remove the weak links, because the fraudsters and the bot, whether bot deepfakes, are only going to look at the weak spots and the weak links and then go and get through that weak link. And that's what we need to be planning.
Okay, let me just add a few words to the discourse. I think when it comes to issues of whether the bank is ready, you cannot totally say yes. That is why I agree with him that the bank is partly ready, but not fully ready. But no matter the readiness, I think the issue is not even the readiness, because when it comes to malicious activity or fraud and the financial institutions, it's like front wheel, back wheel. Because why an organization is trying to look at all possible vulnerabilities and try as much as possible to close them so that they will not be exploited. The threat actors are only focusing on one weakness. And the moment they see a weakness, they focus on it. And you can agree with me that identity is a major challenge in our environment. Now, even the little information we have, most of them have also found their way to the public space. And on application of artificial intelligence, I can assume that even the fraudsters are using a bit of artificial intelligence today. Talk of the like of ChatGPT or Copilot. Let's say ChatGPT. You can ask ChatGPT to create a phishing email. You don't need to pay. So there are a lot of free tools out there. And I can tell you for free that some of the fraudsters in the industry today are also learned. Some of them have even gone outside this country for one ethical hacking training or the other. And some of them are very, very good at also using devices. So for an average bank today or a financial player, we should just assume that our adversary have started adopting artificial intelligence in whatever they are doing. So, and if that is the case, what do? We can use eyeballing to fight against artificial intelligence generated fraud. So we need to ensure, which is the question today, if you are presenting any solution to any average organization in Nigeria today, they will ask you about the AI capability of that solution. And if your solution does not have element of, in a minimum, machine learning, not even artificial intelligence at the high end, I can tell you that the chances that your solution will not be taken is very high. So that is why we try to see how we can layer artificial intelligence in all the solutions we have. Banks, I know some banks in Nigeria have also had that engagement of developing artificial intelligence to layer it on the data they have so that they can make good use of their data, whether in customer service or in fraud mitigation solution. Even the recent CBN guideline on AML, AI is one of the advised capability that an average AML tool that a bank should use must have. So while we are not fully ready, we are not ignorant of artificial intelligence, and I can tell you that at least 50% of the solution in the banking system today apply AI to respond to incidents. So we will continue to collaborate among ourselves so that we use our data appropriately. And the beauty of AI is, when you talk about generative AI, is prediction, because fraud doesn't just happen. Oftentimes, it takes a pattern. And if you can learn from the history of what has happened before, you can even prevent future occurrence. Thank you.
Yeah, no, I think it's a great point, and it speaks to just the dynamic nature of fraud and risk. That no one can ever be fully ready, but you've got to keep scanning, you've got to keep vigilant, and you've got to keep your ears to the ground. So I think we've kind of touched a little bit on our next topic as we were speaking, but the next topic that we were going to talk about was how, with Framil in action, how we can really break down silos and fight fraud back smarter, and whether with threat actors using fraud to hide money laundering and fund money laundering and to exploit your AML blind spots and hide stolen funds. How are we working at different levels to have a unified fraud, AML, risk, and cyber risk response framework? Originally that was for one of our speakers who couldn't make it, but BJ, Festus, whoever would like to chat.
Okay, I can start, and probably when you're talking about multiple systems like fraud and AML and defenses and so on, so there are multiple points of objectives. In one of the objectives, at the end of the day, the theme that covers all these points together is to keep our accounts of our customers safe, to protect our customers' money, and ensure any attacks on any one of those are protected. So these are the common themes. Now, when you see that in action, there are multiple ways in which it's going to be in action. So for example, in AML, the fact that we are going into dynamic AML or perpetual KYC is an indication that you are seeing a trigger, there is a flag, and then you are reacting to a flag, as compared to doing a KYC once in a year. And on the 1st of January, I did a KYC, everything is fine. 2nd of January, the customer moved houses, address have changed, nobody knows until the 1st January of the next year, right? But the perpetual KYC comes in because the address has changed. We have seen one of the markers that raises a flag, and therefore you suddenly realize that KYC has to be done on the 2nd of January because the customer has moved yesterday. Now, that is an example of how perpetual KYC enforces dynamism. The same comes in fraud. In fraud, you have multiple defenses. So you look at fraud at the journey and look at the weak spot. And that is exactly how you do with CISO, with me, information security. So every year you go and test, you do a penetration test, you do all your system tests just to identify what is the weak point, where is the weak link, how do you fix it, and then move on. And then you come up with controls, fix the controls, and move on. So that's how the approach of fraud has to happen across the journey. The third part of linking all these data is the data view of the world and the data focus of the world. So if I know as a part of fraud and threat metrics transactions, the transaction is not coming from any one of the existing patterns of addresses, so that possibly means that the account address has changed. So that could trigger an AML and that could trigger a fraud, right? So you're actually looking at multi-point detections across to address fraud, but you're using that flag for something else. So that is how the connections of the systems happen. And from the time of doing a due diligence to a time of an account takeover protection to a transaction protection to an actual execution and efficiency of the transaction, that's the payment part of the world, because that's where the money is moving. So the last part of defense there would be something like APP fraud. So you would basically say, okay, I know the customer, I trust the customer has given me an instruction, I have validated all the flags, but when they are executing a payment, is it executing to the right person? Is it executing initiated by the right person? So that's where APP frauds have come up in the industry. So that's how you are actually connecting all the dots across the journey, adding multiple facets of data to provide that information, and then triggering one or more of those flags to initiate a review and a response.
I think just to lay on what he has said, for FRAML to really proliferate Nigeria, for example, I think we need to adopt the fraud risk mentality. So if you look at what COSO is doing, they have introduced the concept that fraud is not just something that happens, it's actually a risk. And what, like any other risk, what you should do is to try to identify it quickly, analyze it, and mitigate it. So when you begin to look at it from that perspective, then fraud actually changes, right? You should be looking more at, and I think Ose mentioned it on the previous panel, we should be looking less at detection, more at prevention. Now, if we look at it from a prevention perspective, you realize that AML and fraud are basically the same thing. And Mr. Festus also mentioned it, the techniques that you use to sort of flag ML, TF, PF is what you use for fraud, right? Data clustering, network analysis, prediction analysis, segmentation, customer segmentation. All these techniques will work on both MLTF and fraud. So the real convergence of both of them is one from the understanding perspective. The second thing is for how do you want to treat them and what kind of techniques do you want to use for them. So now circling back to the question, I truly believe that when we have solutions that are equipped to look at both fraud prevention, in terms of, this typology or this particular pattern is wrong, therefore halt this transaction so we can ask questions, it will then feed into higher quality STRs, for example, which is what we do in terms of transaction monitoring, right? Because when you ask those questions, it doesn't make sense. Then you automatically, by stopping transaction, you automatically feed straight into your ML outflow, which is the STR, right? And what will then happen is that you have created an end-to-end flow where you are both mitigating against fraud risk, ML risk, TF, and PF. So I think by time, and if you look at this baseline standard, what is going to do, that this is going to lead to, because a lot of the language there is about interoperability. Interoperability, having solutions that speak to each other. And where we should eventually land is where you have a system where your transaction monitoring feeds into your KYC real time. As transactions are happening, every time you file an STR, your customer risk rating is increasing automatically. As your customer risk rating is increasing, it's putting back into the transaction monitoring solution that this customer is now higher risk. Higher transaction scrutiny is happening. That's also feeding into your fraud risk solution. Your fraud risk solution is saying this person logged in, into the app at 1 a.m. That is unusual. That is feeding into the customer profile. So there has to be a lot of, dialoguing by these systems. And what would be better if all of them are happening on one platform?
That's a good point, because if you see corporates across the world, they've already solved the problem with SAP and Oracle, right? Because we have ERP systems. Whether you use Salesforce, whether you use any of the own platforms or Workday for HR or something, all of them are connected to a centralized ERP platform. So any change in one of the systems will automatically come, and the data integrity is held across the corporates. It doesn't matter whether a corporate is in Nigeria or Ghana or UK or US, right? But that doesn't happen in financial institutions, because, as you said, I think it was you who mentioned about Chinese walls as well, right? So at some point you need to have Chinese walls, but at some point you also want to gravitate towards a common platform, which is what seems to be missing across financial institutions today. And as a technology service provider, we generally try and connect our own dots. So we have, at a payment level, we have APP fraud solutions. At the behavior sec level, we have behavior sec, and we have transaction monitoring, which connects across financial institutions to say, if a fraudster has opened a account in Zenith Bank and closed the account tomorrow, open the bank again in Axis Bank, then we should be able to identify those kind of patterns. So from a technology perspective, the solutions are there, the industry use cases are there. It's just getting all of them together as a part of a community or a jurisdiction to actually implement that, which is what I think the CBN's AML drive is all about, because it is talking about interoperability, it is talking about efficiency, it is talking about technology-driven AML and KYC, but it fell short at fraud because it didn't talk anything about fraud.
Festus, please, you've been patient.
Okay, let me just, we've mentioned a lot about integrating solutions, because solutions cannot remain silos. And that is where oftentimes the SOC team, they say you should have a SIM, because you can correlate information, because some of these challenges might even be internal. And a lot can be getting from the EDR down to your AML or your anti-fraud solution. And I wanted to also go to the other side to say, even with all these things still happen, then when the unexpected happen, how do we now collaborate among ourselves? Because we are talking of money laundering. It can get out of a geographical location. And that is why, apart from the systems speaking to each other, we the humans, we also need to speak to each other, because the fraudsters are not, they don't work alone. They collaborate a lot. Before you know it, money stolen from Lagos can find itself outside the country. It could be in any form of asset. So the need for us to work together is very, very important. Not just the banking, but even with other enablers. You talk about the telecom companies. They have a lot of inputs to some of the fraud we are investigating today. Even the law enforcement agency, there is need for everybody to also work together, because they have a lot of data. And if we can correlate all those data, before even fraud happens, we will see the issues. Even this, in Nigeria today, there is need for SEC and also the CBN to meet somewhere. Because when you go to virtual asset, why the SEC has also made some advancement to make sure that some of these, or the operators are registered. In the financial industry, they're supposed to also ensure that there's regulation attracting them to be a player, because when you talk about illicit fund, a lot also happen in that space. So I'm just speaking to the fact that there is need for us to collaborate more, both locally and internationally, for us to mitigate the risk we are seeing today. Because oftentimes when you have an incident and you trace it to some IP outside the shores of your country, you are somehow limited. You need Interpol to intervene if you must make progress. But time is of essence. And I can tell you for free that some of those investigations can take years if you have not made much progress. Thank you.
Thank you so much. So the next question that we have is about the mobile and digital channels and how we can build layered defenses where they matter the most. So with the explosion in transaction volume for mobile and digital platforms in Nigeria, what layered security controls, whether they be device intelligence, biometric authentication, behavioral monitoring, behavioral biometrics, what are proving the most effective in protecting users and accounts? And I'd like to point that at Festus and Vijay first.
Okay. Thank you. I think to a greater extent we have spoken to that partially. Prior to now, security was taking the backbench to say if you are developing a product, it's after development have been concluded and UAT possibly done, all the functionality tests conducted before somebody will now ask, is this secure? So, but that dynamic has changed. So from day one, security is embedded into what we are doing to make sure that vulnerabilities does not easily exist in an application. Why I use that word does not easily exist, because you've seen situations whereby an application that is not vulnerable today will become vulnerable tomorrow because of the dynamic nature of technology. And having done all that, we also need to look at what do you do when wrong thing is about to happen. And that is where Nexus also come in. Because for there to be fraud, especially for an account to be debited, I'm not talking of fraud that might be coming internally or injection into the database or direct to the application. But I'm looking at from the front end. So there are a lot of protection you can do at that layer to profile a device that is coming into your infrastructure. Because if you are sure that anybody connecting to an account from any of the channel, be it mobile, be it corporate internet banking or internet banking, if you are sure that the right person is the one connecting by looking at the profile of the device, is it the identity of either the browser or the mobile device the customer used before? Or you can be assured that the person is connecting from the IP address or the location it was connecting from before. Then you will have reduced some of the challenges. If not for anything, data breach is a major concern. So that is why you can't just say you are looking at transaction pattern. Because before transaction, somebody's data would have been exposed to a third party. And you can agree with me that with data privacy today, data breach is a major issue, which is where solutions like your device profiling to ensure that account takeover does not happen in any way is very, very important. So we try as much as possible, from what I've seen from different banks, to make sure that you profile a customer, make sure it's connecting from the usual location, IP address, device properties that could be seen either from the cookies or whatever, is the actual person connecting. Then you have dealt with that. So you can also go further to look at a transaction pattern to make sure that, hey, does this customer normally transfer money to this customer or time of the day? So with that, you also prevent fraud from happening. Then there are a lot of profiling that also happen in the account type, because there are some virtual account holders that are registered with a bank. You know that this person plays in crypto or is a BDC customer. So you need to profile those customers, because you need to monitor the activities in those accounts, because most illicit funds actually are routed through such channel. Even most fraudulent transactions, they end up finding their way either in crypto or in BDC or in merchant location. So all those profiling is also very, very key. Then I mentioned KYC, KYB, because we have seen situations whereby accounts are not actually owned by the person that opened such account. So why somebody would have been deceived, maybe by paying some ransom to open an account, a fraudster could be operating that account. So ensuring also that the KYC we spoke to before, to make sure that the actual customer that is transacting is the owner of the account, we go a long way to ensuring that we reduce the risk of fraud even within the industry. Then a lot of capability are being built into fraud tools, different frauds and AML tools, investment in that area to ensure that we secure the ecosystem, because when there are fraud, and that is one area I see that even in the financial industry, we don't compete. Because when it happens in a bank, it could cause attrition in other banks. There are some people today that will tell you they don't want to open a bank, they don't want to have the popular debit card, which is called ATM card, just because of the fraud that they've heard that happened to a third party or someone else. So in order to build that trust, to entrench trust in the system, we work together to ensure that we reduce those risks in our environment. Thank you.
That was extensive. I think it'll be very difficult to add on things onto it. What I would basically say is, when it comes to mobile or digital channels, and let's extend that for a fintech scenario where they have their own platforms now. In all these scenarios, from a design perspective and fraud defense perspective, there are common themes. Is my mobile banking application automated enough to provide account onboarding? If the answer is yes, can I open a bank account using my mobile phone or a digital or online? If the answer is yes, then from a fraud perspective, we need to have account holder defenses. That's point number one. Second, can my mobile banking application execute payments? Can it execute international payments? Can it be used as a wallet to convert that into cryptocurrencies? If the answer is yes, then you need to have transaction-based defenses. That's the second set of defenses you need to have. Then you need to have processing and monitoring defenses, exactly how Festus mentioned. So you would need transaction observation behaviors using multi-source authentication. So it's not just what you're seeing from a customer, it's what are the alternate sources, are we able to corroborate all those patterns together, and does it make sense? So that gives you a risk score. So then that is what you're going to use. Then you are also using multi-point authentication, so apart from multi-source. So multi-point authentication is what is known in the industry, OTPs. You send a email, you check that email, you check with multiple areas and so on. And then obviously the physical identities. The physical identities are important because it just adds another source to the multi-source authentication. So all these in together, a system analysis will give you a particular risk score of how likely or unlikely is the fraud existing in that particular transaction. So that gives you the next step to do. Now, even after all these, you still have a romance scam, you still have CEO scams, you still have all the other scams where the person is, the fraud actually happens even before, and the person is actually doing it with all consciousness and then realizes the fraud has happened. So there are multiple layers of fraud across, even in the digital and mobile channels, which basically means from a fundamental principles, we need to ensure basic accounts, transactions, patterns, behaviors, multi-point, multi-source authentications are put in place. And then every time we have to dynamically review that and see what the exposure is and then fix those exposures over the period of time. That's the best, at least from what I see, the best approach of actually connecting the dots, especially in mobile transactions.
Okay, so just to, and you mentioned some things that were very interesting for me around, so while we talk about fraud, a lot of times we always assume that, it happens in the dark and is unknown. But like you mentioned, there is the fraud that happens before, where the person has been, rewired, and the person is knowingly doing it, right? Is knowingly doing that transaction. And I think, looking at that, I think I would like to take from what they do in the UK, for example. And I think a few fintech players have started doing it, and I think I would encourage a lot of financial players to do it, which is when you want to send transaction to someone, when you want to send when you want to initiate a transaction to someone you have never sent money to, they include something called risk-based friction. So they will say, you have never sent money to this person before, why? And after it will give you like additional prompts. It might even ask you to do like facial recognition to be sure you are the one. And that concept, risk-based friction, I think is very important. I did some work on it some years ago, and it was a very wonderful concept, right? It's very interesting because, like you mentioned, around obtaining data points around a particular transaction. And what that does is that when you have a solution that picks all the way from when you pick up your phone and you are trying to log into your app, it looks at how many times did you put in the password? What way did you type in the password, right? Is it unusual? The way you imputed the transaction, the way you interacted with the app. And based on certain indices, it introduces friction. So maybe normally what you need to put in place to authenticate the transaction is just your fingerprint. But because you put in the password twice instead of just putting it one time, because you have never logged into your app by that time before, it would introduce maybe 3 authentication levels, right? So it might ask you for your fingerprint, a security ID, and maybe voice, right? And when I saw that, I was like, look, if you have something like this, it's going to minimize device-based fraud significantly, right? The only thing, of course, is that it's friction, right? But it's good friction. That's one thing I wanted to talk about. The second thing I also want to add is compliance by design. Like Festus mentioned, I think the information security guys, they have been able to solve that problem, which was when doing the iteration of the products, they are able to come in at the beginning at the conceptualization level and be in those rooms. I don't think compliance guys are there yet, we are always at the end. So typically they just come to you after they have done the UAT and they're like, oh, sign off. So I think it's the battle we are fighting in the financial ecosystem now. We are trying to do that compliance by design to make sure that from conceptualization, we are in those rooms and we are, applying those regulations, those laws, and we are also helping them design those applications to make sure that they mitigate all those risks as well.
And the funny part is everything that we have said in the last 5 or 10 minutes has to happen in real time. and that's where the fun is, because that's when you need to know that's the kind of complex nature of systems that we are saying, and it's very easy to let slip 1 or 2 of the things going off. And that's where you need to have some kind of an integrated solution across the board, which will look at all these hundreds and 200 points in order to come up with that kind of a risk-based vision.
Okay. Lastly, from me, I want to bring in awareness here. Because of all the solutions we are building it for humans. And the humans are the last man standing in some cases. So let me use this opportunity to encourage every one of us to ensure that we adhere to those advices that our banks or financial institutions have given us. A situation whereby OTP is coming to you. You don't just pick the number and give out. Find out what is that OTP for. In case of WhatsApp hijack, most times somebody is going to call you that, oh, there's going to be a prayer meeting for one Old Boys Association or one church or one thing or the other, and the code is sent to you. If you read the letters in that code, you'll discover that it's telling you something about your WhatsApp account is being onboarded in another device. Use that code to complete. But we don't read it. You will just go, give out those OTP. Somebody might be telling you that this OTP is being used to bind e-token to your e-token to your account, and you give out that OTP to a fraudster. Social engineers win all over the world, but with awareness, no matter how lagging it might be at times, or no matter how we think that even with awareness, people will still do stuff, but it's good for us to keep on retreating it every now and then so that it will become part of us. You never can tell. Somebody will just remember, oh, I remember what someone told me, so that you will not also fall victim. And when you leave here, please ensure that you advise people on some of the basic awareness to remove fraudulent practices in our system. Thank you.
Thank you. And just my very, very last comment, just because I love risk-based friction, risk-based response, is really echoing Festus' point there. Scammers, social engineers will just say, oh yeah, do the facial authentication. Give me your PIN. So having targeted and specific, scenario-specific messaging coming through at the right time in the customer journey, that is the other side of that risk-based friction, which is really effective as scammers move away from just technical attacks to human-focused attacks. And I think I'm about to be told off for running over time.
Not at all, Kira. Not at all. But I just wanted to see if we have questions, even on the Slido, as the case might be, so that we can have some of these responded to, or we have any questions in the house. Yeah, please, Osher, can you help me out? Because I didn't want it to just be so much of you guys having a conversation. And by the way, we're enjoying yourself. We're enjoying you as well. But we said if we let you guys be, we won't leave here till 8 p.m. So it was important for me to have come up. All right, ma'am. What's the name, the organization, and the question? Please, let's also have the slider up so that we can take some of those questions on it as well.
My name is Francisca Babatunde Beke. I work with SID Digital. It's a subsidiary of Secure ID Limited. So my question is, sometime late June, the CBN held a stakeholder section with CEOs and CCOs of payment service providers. And one of the key things that were discussed at that event was that about, okay, some statistics were rolled out in 2024. They recorded 52 billion lost to fraud. And what was interesting about this is that a significant portion of this could not be traced because they were related to virtual accounts. Because of course, virtual accounts don't have any audit trail. So my confusion, or my question in all of this is, how does all of these discussions fit into addressing this as a key business concern? Because you know what CBN told us in that occasion? They said, virtual accounts are alien to regulation, and as it stands right now, we do not acknowledge it. However, in the absence of official, maybe notice outrightly prohibiting it, of course, you will not be penalized for using it, but then they are working towards it. Maybe, I don't know if that's going to happen or if there's going to be a prohibition. Now that's on the first part. So the first question is, how does all of these discussions, the tech, fit into addressing that issue? Now, my second question is, we've talked a lot about ongoing due diligence, several levels of KYC, and what comes to my mind is, we're in an era where people don't just want things fast, they want it easy. If at every stage in time there's something that looks like a bug, I don't think this demography of persons right now have the kind of patience for that kind of,
That's true.
True. So it's going to reduce customer adoption of certain maybe financial technology products, and they're probably going to look for the easier products. And so how do you balance the security for your products and of course and of course the business end, customer adoption, and not pushing them away? Thank you very much.
KYC customer adoption. We'll take that question. I'm very sure this is the virtual accounts thing is also one of the major concerns. How is it that people operate accounts, funds gets into that, and then all of a sudden you can't? it's like I don't know. So, and I'd like to hear from the banker as well, because Mr. Festus, you've actually ticked up my interest a lot. So, but over to you, Kira, and then we'll respond to that. Perhaps we'll use that to wrap up. But before you go ahead, is there any other question, just in case? Okay, that's just going to be about, and I think that's good enough, 2 in 1. All right, over to you guys.
So, in our earlier discussion before we met today, we actually spoke a little bit about virtual accounts, and Olagoke actually was feeling quite strongly about the topic. So I think it'd be great to hear from him, and also Festus when we have a moment.
So I'll just kind of lay the foundation so Festus can dunk the ball. So in terms of virtual accounts, when you mentioned that they are untraceable, I frowned a bit because that's not true. Right? That's absolutely not true. I think that's the industry belief, but everything is traceable. I don't want to start going into the details in terms of the architecture, right? But virtual accounts typically are hosted by banks, right? And then we kind of, in a kind of, I don't want to call it correspondent or respondent, but really that's what it is. We have like a relationship with the fintechs, and then we provide that infrastructure to them to extend it to customers. Ultimately, they are accounts, right? I probably don't want to go against what the CBN has told you, but I know that we have been in a lot of closed-door discussions with them, and we have made it very clear to them that it's not anything alien. So if you understand the NUBAN account, NUBAN is the accounts that everybody uses. It's the same thing. The only difference here is that we issue these accounts to third parties, that's one. 2, the accounts do not follow the NUBAN algorithm. So every bank, again, I'm going too technical, but the point is they are accounts, right? They are accounts. There are 2 types of those accounts. There is a static virtual account, there's a dynamic virtual account. They all have different use cases. They all have audit trails. The problem here is that they are being abused. They are not being used the way they were supposed to be used. So ideally, some of those accounts are just supposed to be temporary stopgaps, and then they flow into settlement accounts. Because the people who issue these accounts, like I said, payment service companies and all that, are not supposed to hold accounts for customers. They are, if you have an account with a bank, then the account is in your name, right? But you can't have an account with a PSP because the PSP is not supposed to hold accounts for anybody. So typically, what they are supposed to do is the money is supposed to touch that virtual account and then go into a settlement account. From the settlement account, it goes into the customer's account in a bank where you can hold money. Long and short of what I'm saying is that the reason why it seems like money is disappearing is because those things are not being properly used. That's one. 2, there's also the hidden layer of crypto, right? So when some of these things happen, why you think the money is disappearing is because the money has been converted into a virtual asset and it has left the fiat ecosystem. So you can't see it because the crypto ecosystem does not have a connected audit trail to the fiat ecosystem. Again, the point of it is, I think by the time the regulators have technical discussions with the players, these things are very, very clear. Whether we'll then put in place regulations to guide them is another discussion. But I do know that we have been in one-on-one discussions with the CBN, and I was part of that. We explained what it was to them. And a lot of financial institutions have processes in place to manage these things, right? For example, my financial institution, we provide banking as a service. And we have clear guidelines, even though they are not backed by regulations, because there are no regulations. But we have clear guidelines around how we provide that service. So I don't think it's a risky business. I think it's just being abused. And once regulation comes in, structured control comes in, it's a wonderful innovation, believe me, wonderful innovation.
And I can pick up the second question of instant, right? So we are in a world where everything has to be instant. And the more years we go forward, the more instant is likely to become. So if you see, there are already almost 71 countries across the globe who have initiated instant payments, and they are all domestic. In Asia Pac, there is something called as Project Nexus, which has been rolled out by Bank of International Settlements, and that is to connect cross-border payments in an instant environment. So the world that we are going to is likely to be in a place where every transaction is going to be real-time, every transaction is going to be instant. It doesn't matter whether you are within Nigeria, whether you are in Western Africa, or even making a payment from Africa to, for example, Japan or South Korea. So that's the world that we have to live in. And that is always the challenge for a technology service provider like LexisNexis Risk Solutions, because at any point of time, we know that future is coming. So in all these cases where we have to balance the compliance, balance the fraud defenses, and balance the speed of transactions, we know that we've seen economies over the period. If you see the last 10 years ago, the compliance posture 10 years ago was very little as compared to the compliance postures that the financial institutions today are having, right? There is only addition and more addition and more addition. So does that mean the payment is going slow? No. In fact, the payment is actually going faster. Because what is happening is in that compliance postures, there are very large 80% of the element of compliance is automated. So when that gets automated, you're only looking at maximizing and only checking the due diligence and the risk posture for the remaining 10 or 20%. So therefore, the standardization is automatically becomes an industry standard, and therefore the payments become let alone payments, even trade transactions become faster and faster. And to be honest, we'll be very soon in 10 years' time where even blockchain will start having instant trade financing or cross-border letter of credit. So then in that case, what happens is the regulations will catch up, and
Right.
it is only going to be better for the economy.
Okay, I think Festus has a response to that, but don't forget a second question with regards to speed of, the KYC issues and this generation as the cases.
Okay, I think I plan to start from there. So it's a balancing act. When you talk about performance and speed, or ease of use and speed, any car without brake cannot get to its destination. So, but customers want everything very quick, short step. Multi-factor authentication is a problem to customer.
Yeah.
If possible, the customer prefer one-digit PIN. So I put my transaction, either I type 1 or 2, not even up to 4 characters, and the transaction goes. But when something goes wrong, the customer will come and blame you that you never protected him or her enough. So that is why where regulation now comes in, so that it will not become a marketing tool where one organization try to secure their customer well. Some high network individual will not mind pass through the whole process because they know what they're securing. But you see somebody that just have 2,000, 3,000 naira, he will go to social media and it will become a major case. I remember back then when we started banking, if somebody comes to withdraw maybe 500 naira or say 5 million naira, because our money has not devalued to this level. If somebody comes to withdraw like 500,000 or 1 million naira and the network is down, he will quietly go to the teller to say, when will the system come up? He doesn't want to be noticed. But that person that come to withdraw 500 naira will bang his hand on the teller. We even want to slap teller. When I brought my money, network was up. Now that I want to withdraw, you're telling me network is down. So we are in a country where we are not patient. You can give it to an average Nigeria. So regulation need to actually sway.
Sorry, Mr. Festus, does that also have to do with perception? Perception that the customer experience, I'm not too sure where it was. I think it was in the F&I session which you sat in. I think it was Henry who was talking about customer experience. It's a customer's experience. So the man who has 5 million and the man who has the 5,000. The man who has the 5,000 perhaps can do more harm to the brand of the institution than the man who has the 5 million. But the reaction of the man with 5,000 naira would be perhaps a perceived experience or some kind of idea that this institution doesn't care enough about me to make sure that I'm able to access my fund at that particular point in time. And so that's part of what even dovetails to our question. I just thought to mention that.
Yes, thank you. So regulation need to, I'm saying let it not be a marketing tool, because the more you tighten control, the more you see customer attrition, because it's not taking longer time to do simple things. So, but we need to balance it. We need to educate ourselves. In most cases, we bring in indemnity. To say, okay, if you don't want this stringent control, just sign this indemnity. So it is something that all of us have to work on. It's not just the banks alone, because we are all in need together. It depends at times in where you find yourself. There are situations where you find yourself, the money means more to you. There are situations where you find yourself, you can give out the money to have your life back. So while we put control in place, we need to also have understanding. But the truth is that even the banks or the organizations, we need to do more, because the customers are the one that should tell you what to build. You should not build you are building a house for me. I should give you the specification of the house I think I want to live in. Yes, we can advise you on how that account should be run, but we need to also hear more from you while we are building solutions. We are mindful of that, because you are the reason why we are doing our business. So having talked about that balancing act, then the other issue we are discussing has to do with virtual accounts. Like he rightly said, every fund is traceable. I think virtual account is one of the reasons attributed by CBN. I was in some of those meetings. And those virtual accounts, ideally, were supposed to be used for some merchants and fintechs to manage. Some of them are temporal, some of them are fixed, to manage the transaction. As they're coming in, they must end somewhere. But any virtual account at any point in time is mapped to a customer. Just like your IP address on your phone today. If you are browsing the internet, an IP is given to you at any point in time, but that IP is not yours. At another point in time, another person will inherit that IP. But the telco should be able to tell you this public IP was used by this customer at so time. Because internet or digital system does not forget. Footprints will be there for life, as the case may be. So I think one of the things that actually contributed also to the problem is not adherence to some defined regulation. That is why ensuring that we comply to regulation is very, very important. Of course, there could be deficiency in some regulation. I remember when this account, all this fintech account, that your mobile phone becomes, it's not a Nubank account, but your mobile phone, just remove the first zero, it becomes an account number. It's now your account number. And they have tier 1, tier 2, tier 3. Initially, there were no enforcement on what must be in place for those accounts to exist. And that is why when the fraud rose to some extent, CBN now insisted that it must be the phone, either in the BVN, you need to go and validate with BVN database, or the NIM database. And in some tiers of account, you must have not just BVN, but BVN with NIM. Because the rate at which those phone numbers were being used, it was just expedient that every fraudulent transaction was going to destined to fintech, because most of those phone numbers, imagine somebody can open 1,000, 3,000 accounts in a day with different phone numbers, no validation, nothing. But since validation was introduced into the process of having those numbers, as the organization will be made to pay for those proceeds that ended up in those numbers, fraud in that level has decreased. You know, we can only eliminate risk. You can't totally remove risk in the system. The only thing that is more worrisome now is the rate at which innocent people are opening accounts for fraudsters. I think I mentioned it in the other session, whereby people are paid like 25,000 naira, and they will do facial recognition, everything, and open a valid account, do BVN. This is a young boy that is about 20, playing football in one village, or just going about doing one bricklaying job or the other. And you see opportunity, bros, they will go to them. We're working with NIBS. We saw a lot of it, whereby they paid them 25,000 or 50,000 naira, and those accounts were open. Some of the last incident I investigated with CP Uche the other time ended up with one farmer in Sokoto. And the moment CP Uche saw that, I said, Festus, I mobilized my guys to Kaduna, arrested somebody, but there was a mistake. We went to Sokoto, got the man, but I can tell you for free that that man is not the operator of that account. But we still have the person in their, they still have the person in their custody. And this is a farmer. Somebody can just go and tell your father, oh, I have a contract, I don't want to use my name, so I need other names because I've done business with them. Before you know it, the innocent man will go and open an account, BVN, everything that account need to have. And that is where we said awareness is very, very important. Let us educate our young ones in the village. Let us educate our elderly ones, because any of them can be used as proxy. There are situations whereby they just transfer money. Oh, I mistakenly transfer money to your account. Help me transfer the money to the other account because I made a mistake. I changed the number. Don't tell your bank to return the money to the source. But do not make yourself a proxy for illicit fund, because they will transfer to you. You will transfer to a third party because somebody called you.
All right.
The law enforcement agency will not want to hear you. So it's a lesson that all of us need to learn, irrespective of who. Even if a person mentions your name, can't you remember me? We are classmates in secondary school and all that. It could be a lie. Please, if there's any fund that comes to you, let it go back to the sender. Thank you.
Okay, thank you. I think Vijay wants to make a comment because I see you holding your mic, but as briefly as you can so that we can wrap up the session.
There's 30 seconds. The one thing that I liked about what Festus said was, at the end, human is the last source of defense, right? That's natural. If you are making a payment to your friend, 100 nairas, you won't think twice. You just enter the details, make sense. Now, just imagine if you're making a payment for your deposit of your house. You will see the account 100 times. You will check the account details, enter every time. You will check 4 times before you make a payment. That's human behavior, right?
That's true.
And that's where I wanted to support the fintechs and the banks here with me, because that's their behavior as well. You send £5, £10 across, it goes fast because you know what you're doing. But the moment it is a high value transaction and it is a critical transaction, or it is for a deposit, or it's a payment, or you're making a payment to some buying a car, right? The red flags automatically go up, and that's where I think what they're indirectly doing for you is they are doing the checks just in case you've made a mistake. So that's why I think as a community we have to appreciate banks and financial institutions, because they are guarding something behind your back.
All right. Thank you, ladies and gentlemen. Rowan, we can wrap up the session now as it is.
Well, yeah, I'd just like to thank all of the panel for their excellent input, really interesting conversation. Thank you also to the audience for questions and so on. And yeah, I'd say that's it for the panel.
Okay, thank you very
so
much. Please,
guys.
can you put your hands together for them? Please, let me have you guys come up for a group picture. And then I would like to invite Intakisha to please come up to help me present this gift to our panelists after they take the picture. And afterwards, I would like Frederick to be on cue. He's going to help me also to give 2 prize winners, so to speak, tonight. And after this moment, we will have a QR code that is going to be beamed on the screen. It is for the survey for today's outing. Thank you, gentlemen. But before you leave, just hold on a moment while Intakisha comes up so that... okay, Vijay, I don't think you will receive part of this, so you can. It's for Festus and Salah. And then the other members of my speaking faculty, we are going to also invite them to come up to receive this token and gift of appreciation. Over to you, Takisha. All right, do we have who next? All right, I'd like to now also invite Mr. Henry Duragbo to please come up. Mr. Henry, please come up for this appreciation. And of course, Mr. Salahu, please do not leave. We'll need to talk because some of the concepts you and Mr. Festus shared, we'd like to expand this conversation. Thanks to LexisNexis for bringing all of these in together. Thank you, thank you, thank you. This is so exciting. And I have more of my speakers in the house. Is Mr. Okongu Chukuma Samuel still around? Yes, he's around. Please, can you come up? Okay, please. Thank you very much. We want to say a big thank you for being part of our speakers and panelists. And it's Mr. Ejike Madunemem of NIMS. Yes, you have to be around. I think I saw you earlier on. Mr. Festus had mentioned you with NIMS, and that itself. This is from LexisNexis to say thank you. LexisNexis Risk Solutions. We do what we do so that you can have your peace of mind. Okay, thank you very much. And I think we have one more person, Mr. Oseduken Iguabo. Are you in the house? Mr. Oseduken Iguabo is in the house. I believe he is in the house, but I'm not too sure if I still have him here. I have Harrison. Harrison is not here as the case might be. That is in Naji. But I also have Mr. Adeleke Abimbola. I couldn't forget that. I was looking out for your name. EY, Ernst & Young, so that I make sure that I got the name right. Thank you very much for being part of our faculty for this year's edition of the Risk Ready Nigerian 2025. Great, great. And of course, I would like to also invite to come and receive there's Mr. Vijay Of course, Vijay, you're not coming up. You know I'm just pulling your legs. All right, I think that should be about it. Yeah, thank you so very much, Intakisha. And I would like to invite Frederick. Frederick, please, can you come up to help me out with this final piece? And that the QR code is up for the survey. Please, ladies and gentlemen, kindly go through that survey. We want to gather feedback from you all to make sure that we're able to capture the high point of today's engagement. And so this is actually going to, number one, the highest active participants at this Risk Ready Nigeria 2025. When I said to you guys that I was watching keenly, and I thought that this was one of the ways to say thank you for making my job so much more engaging. And of course, LexisNexis Risk Solution was willing, as a matter of fact. Please put your hands together for Rita Ayotunde. Rita Ayotunde, who was at the F&I breakout session. Please come up. I know you made my job easy, and I had to put you on the spot. If I had my way, you would have just been on the panel, because a lot of the questions which you asked, not just 1, 2, 3 or thereabout, actually give you this aspect of it to make you the highest active participant for the Risk Ready Nigeria 2025. Thank you so very much. All of your questions actually helped us to drive some of those major concerns. And of course, we say a big thank you to all those guys who actually asked. But like I mentioned earlier on, I said the highest, and she was the highest. She's surprised. Can you see the smile on her face? That's to tell you that she is risk ready for 2025 and beyond, thanks to LexisNexis Risk Solution. And ladies and gentlemen, the highest social media engagement, when I said you should share the hashtag and do all that, everybody thought I was talking. And here I am. I would like to recognize and welcome to the podium to receive this token of appreciation, the person of Adedunni Ojo Ade. Please put your hands together for Adedunni Ojo Ade. Are you the one? Okay. I was wondering when you stood up. Why didn't you wait when I finished the name? It was when I said the name. Okay, that is great. The women are taking over. This is interesting. Fantastic. This way, thank you very much. Adedunni Ojo Ade, you were the highest social media engagement that we had today. I'm very sure you dealt with the Slido, you dealt with the LinkedIn, you dealt with all of that and the hashtag. We want to say a big thank you for being part of the Risk Ready Nigeria 2025. You've done well. Say a big thank you to you one more time. And so, ladies and gentlemen, I want to say a big thank you also to Frederick for helping me do this wonderful presentation. We've come to just the end of the event. But please, we still have one more activity on ground. I would like us to please scan the QR code and have that survey filled in so that we can get some of your perspective, have some of the recommendation and choice you have. And after that, we have a networking reception for you who have more questions that you want to deal with. But I would like to invite Madam Diana Abayok to please come up. She's the Seasoned Business Development Manager specializing in West Africa. And she's going to be helping us with the closing remarks at the Risk Ready 2025 edition, with which we will, before we do that, we are going to now have our last session with a group photograph and then the survey report, and then we will call the event a day. Thank you very much, Diana. Please, mind to step.
Thank you very much, Stephen. Hello. I know at this point, after we've eaten, our voices are a bit down, but please raise it a little bit for me. Hello. Okay, so I'm being tempted to say a cabo. Is it for thank you or welcome? Pardon me. Oshe, Nigeria, we want to say thank you very much. And today we want to say a very big thank you to everyone who made it a point to be here with us. And we say that you are not just our fellow professionals, but you are friends to us. We actually call you friends because we believe in the fight for financial crime. We are more than colleagues because we are all geared towards allies, standing shoulder to shoulder in a shared mission. The challenges we face do not respect institutional boundaries, and the solutions we build must be born out of trust, collaboration, and mutual commitment. As we bring Risk Ready Nigeria 2025 to a close, I can't help but reflect on the journey that we've all been together today, from the Central Bank's vision for a stronger compliance future to the FIU's perspective on intelligence-led prevention, from exploring evolving sanction landscape to breaking down complex fraud and AML case studies. Each session that we had today has reinforced a vital truth for fraud and AML, not a separate battle, but they are one united front. We would like to leave you with this call to action that break down silos between fraud and AML functions, as we saw from the FRAML panel, adopt intelligence-driven solutions to stay ahead of threats, and strengthen partnership within and beyond your organizations as you step out of here. On behalf of Nexus Risk Solutions, we would like to say a very big thank you to all our speakers, our panel members, our moderators, and you, our friends, as we are going to say all the time. Thank you very much once again for making this a successful for us. And would like to say, Risk Ready 2025 has come to a successful close. Let's give ourselves a round of applause as we end today's session.
Well, I've also said you're an excellent speaker, and we're glad, and I want to say a big thank you to LexisNexis for the privilege of being part of this successful event for this year. And I want to say a big thank you also to every single one of you. But what we're going to do as a way of wrapping up, ladies and gentlemen, it's always important for us to have this image captured. So we're going to ask that everybody, while you're being mindful of your personal items, we want to have a group picture here up on the stage. So please, can we all come up so that we can have a total group picture of everybody who is present here today. You never can tell what that is going to help us to make an announcement with. So ladies and gentlemen, can we all come up? And then we have some people stand down here. We have some of us who stand up here. And then we will take a group picture of the 2025 edition as quickly as you can so that we can all wrap up. As I promised, we're going to leave here on or before 5 o'clock. But we're doing great with time. Okay. So ladies and gentlemen, can we have some of you who, will the ladies be up or the men down? How do you guys want it? You have to vote this time. Ladies up. You better give them their way because they are risk ready. So can we have the ladies come up while some of you stay on the ground? LexisNexis team, you can be on the ground here so that we capture the image fully while we have other delegates up here. So we have the ladies and the men up here. If you know the men, you are very tall, please come up here so that we can have you. Salawu is looking at me. You, of course, myself and you are dragging height. You know, you can come up here. So there is enough space for everybody to capture. You want to also do this, and then we perhaps might take a selfie still and a share on our social media with our different hashtags so that we can have all of this moment captured. Well, we still want some ladies downstairs, if that is okay. All right. So LexisNexis, you guys have to be in the middle so that we can have that. All right. So we're going to ask some of you guys to go this way. Let's have the LexisNexis team. Come here. Where's the Donald? Okay, VJ, you come up. All right. So just spread. Some of you can go up. You can go up still. We still have more. No. Don't Don, you come in here. You stay in the middle. Okay, fantastic. Yeah. So let's have some chairs. Some chairs so that we can have that. All right, if you know you are taller, I think you might have to go up, but I still think we can still work with this. So let's have more of the seats. LexisNexis, you guys can have a seat. Yes, LexisNexis, please have a seat. Yeah, great. Donan, you sit. VJ, you sit. Frederick, you sit. All right, so we want one seat here. One seat here, or you close it up. Or you close it up. Watch your leg. Watch your leg. Watch your leg. One more seat. Don't worry, there's enough space. Just spread. Everybody will be captured. Don't be afraid. You know. Yeah, where will I even stand myself? Are we good? Please sit. There's some other people still can sit. You can still sit. All right. Are we good? All right, what we are going to announce. Can you see my head? Okay, you can see my head. All right, I'm standing beside this tall fellow. What's the name?
Olaniro.
Olaniro. I'm taller than Olaniro today. All right. So are we ready? After 2, on the 3rd count, we will say risk ready. Are you ready? 1, 2, Risk Ready 2025. I forgot that part. All right, let's do that again. After 3, Risk Ready 2025. 1, 2, 3. Great, one more. Somebody was laughing. I wonder what was funny. Was it the risk or the 2025? Oh, it's all part of the spirit. Ladies and gentlemen, we are glad that you guys made it to the end. Thank you. One more time. After 3, 1, 2, 3. Yeah, please put your hands together for yourselves. Thank you, ladies and gentlemen. This has been an amazing journey and is one that I'm very proud to be a part of. And I want to say thank you to all of you representing different organizations that have made this all well. We're still very much available for the game. We want you to also take up the survey and then have more of this engagement going on, ladies and gentlemen, while I hand over to GH Productions for the house music. My name remains Stephen Ipalabo Lawson. Thank you. God bless you as you go home safely. Till we meet again. Bye-bye for now.